Okay. Test. Hello, everybody. What's going on, guys? What's good, team? What's up, guys? Good morning. Good night to some of you. Good evening. Good day. What's up, Anton? What's up, FX? How you doing, man? Hello, everyone. How's everybody doing on this beautiful Sunday? At least it's beautiful here. My eyes are itchy because of allergies, which is very nice. Fantastic. Amazing. What's going on, everyone? Doing great. Sunny day here. Hey, same here, man. Same here. What an amazing week. This has officially marked one of my personal best weeks of the year so far, just around. It's been a crazy week. Just the last two have been really, really nice. Moves are starting to develop. Saw a number of people running on a good bunch of moves. We saw some people dropping their own personal breakdowns of their moves and their continuation runs. I know our boy Dan H caught an absolute beautiful position. I'm just going to showcase it right here. We had Dan H that's in this position and still in it, still running on this. An absolutely beautiful play on that EU short from the exact areas we discussed off that 4-hour continuation. Something that I'm actually going to talk about today is a little bit of that context-based methodology, approaching markets with a context. Absolutely beautiful. Did a full breakdown of what he saw from a higher time frame down to a lower time frame, just really showcasing how we diverge from the thought process of, what time frame are we trading on, and instead look for the actual moves and the price action, right? We're looking at the orders that are coming into the market rather than just that time frame. We just use time frames as a tool to understand what those orders look like across time frames, and then we use that to propel a further bias that we can then trade. Been absolutely insane, an absolutely crazy week. Those of you that were here last week that experienced the Triple M trade plan that I broke down, I caught 2 Triple M based trades, both on the long side actually this week, and both of them were absolutely insane. Something that I will break down today as well. Congrats, Anton. Thank you, dude. Thank you very much. Yeah, it's been a crazy week. So congratulations to a number of you that were able to partake in the moves this week. And before we get started, as always, let me drop the disclaimer. So guys, disclaimer: most people in the markets lose money. Most people, even if you're here, are likely to lose money. I think the statistic is 95% plus of people end up failing in the markets. Trading carries a very high level of risk. If you don't know what you're doing, you're going to lose all your money. If you don't understand this, you should go seek guidance elsewhere. Everything that we share today, everything we talk about, is perspective-based and personal opinion only. Please recognize that anytime I talk about taking trades, taking something that I've taken, these are all personal things that I've done myself, and you should view them as simulation only, just for your own sake, so that you can develop your own trade plans and you can develop your own responsibility in the market, so that when you're making trades and you're either making money, losing money, whether it's live, whether it's not live, this is all your own, all on your own terms. Shit, no suing again. So close. Nah, bro, you got no chance. I already have that in the terms and conditions, but this is just in case. mentfx shitcoin pump and dump. I don't know what that is. No need. We don't play shitcoins out here. Happy Saucy Sunday. What's up, man? What's up, Haj? I hope we all are good today and ready to absorb some knowledge bombs. Yeah, dude. Can't wait to drop some stuff with you guys. Webinar 89 plus the YouTube public plus backtesting mentfx overflow Sunday. Good that the weather is shit in Germany. Hey, that's how we do it, man. Coffee ready? Same here, man. Just got back from Dunkin'. So as always, guys, feel free to drop some Q&As, some questions down below. I'm happy to look over a number there. As always, don't drop like names of pairs and stuff. Outlooks will be later on in the video. We always do, or in the webinar. Outlooks are always just a little bit later. We do them later. We start talking about the trades that we have taken, the breakdowns of them, the contextual approaches to them, etc. So that'll be later. Feel free to drop any questions that you have outside of that, though. We're always happy to go over some of them. Coffee is ready. Awesome, man. I'm gonna turn on my air conditioning really quick because it's kind of hot in here, and I have a hot coffee as well, so we can't let those overlap. Audio and video check. Yeah, we're looking good. About 94 people in here. Probably gonna hit 100 in a second. Good way to close the weekend with some sauce. Hey, I'm excited, man. Love you, Anton. I love you too, Tate. Don't know how you got internet from jail, bro, but happy you're here too. I have a feeling this Webby is gonna be real saucy. I got you, man. Video lag seems better. Still not like the posted recordings. Yeah, it's always gonna look better in the aftermath, but it is what it is. Anton, do you put the break even above the entry? Oh, thank you. I will disable the annotations. I appreciate that for whoever did that. So that's done. Thank you very much for that. So let's just get right into it. If no one has any questions, I might just end up working through some of the stuff that's been happening in the group. I forget, so I try to remind myself. Usually throughout the week, you can see this. This is a fully personal chat. Maybe I'll make it public. It doesn't really matter. But I just post myself stuff here all the time that I see intra week. I mean, I see an absurd amount of stuff that can help people get ahead in their journeys, right? But I just post stuff here and there that's like maybe important that I might bring up later. Because you know there's always something that you can learn from any given week. You know there's always some kind of focus of the week. I think the focus of this last week and this week alone is the fact that, you know, as you get much more proficient in understanding where you are in a bias or a context, you start to recognize that it's not, you can actually take trades on both sides of the market. So you might notice that, you know, anyone that's been here for a while, you guys know that I've been relatively bearish or looking for bearish to come in on this market due to the number of MBs that we had to the top side already. And you know, so the follow through has been looking to be bearish, and then we confirm that follow through, right? Because again, one time frame or one break or whatever it might be is not the end all be all for determining whether or not we're ready to trade a bias, right? What we then do when we see a break like this is we then go ahead and prorate that to a lower time frame or other time frames to view whether a model for a trade plan is setting up. What are examples of models for trade plans? So the answer there would be things like the redistribution model or the reaccumulation model. This would be the idea of or the reversal model, right? Where you have multiple MBs coming up, maybe breaking, maybe going long, right? So you have long and it comes up into an area you're expecting to see shorts from. And what happens from there? You get your MBs or your double MBs and you begin to follow those short. That's the reversal model for shorts, for instance. Another model for shorts, as we call it the continuation model or the redistribution model, is where you already have a bias where you want to see, let's say, a low delivered to, and price is already moving short, right? And it's maybe made a few MBs, and then it makes an MB long, followed by you either already instantly confirming lower timeframes in here for continuation shorts, or waiting for the re-break down, at which point you refollow the redistribution model for the short side down, instead of focusing on forcing longs in some of these areas, right? Or in some of these areas, or in some of these areas, which is what a lot of, as we like to call it here, which is what a lot of the dumb smart money does, or just basic dumb retail, right? Because any low for them is a support zone, any break up is a change of character or a spring for a lot of dumb money. And we don't think this way, right? We start, as you learn the content here. So by the way, if you're new, it's good that you're here. But as you learn the content here, you learn to think about how the market actually moves rather than the pattern that you need to use every single time to always be on the right side. It's not the fact that this creates the guarantee of a run up. It's the fact that this right here, prorated to a lower time frame, maybe you find an accumulation model where it does something along the lines of this. It's the fact that when you put these two together, it's creating an optimal scenario where price will now either want to continue long to then hit this high and then the bigger high, or will come back into the zone and then continue to the high. So this is the idea of when I say trade plans, right? We have ways that we understand the market moves. So what's going to be the focus of today's webinar is the fact that, you know, we had this bearish break on the daily, and we've been speaking about the fact that we have multiple MBs to the top side, right? We're in this multi, like 4+, 5+ MBs to the top side in a market that we are expecting is still undergoing accumulation, which means we wanted to see some form of bearishness come in. And as that bearishness came in, we began to follow the lower time frames. And what did we see, guys? What do you remember we spoke about last week when price started making these double MBs up? What did I tell you guys these would end up with? What did I instantly tell you that we were looking for? Right? Exactly. So a lot of you know, and you remember, we spoke about the fact that the better probability is that the redistribution model wants to happen, which means that at that point, you're either following lower time frame reversals, aka, you know, you start seeing MB1, MB2, and you look to follow that, and that's where you get position in there. Or if you're on a lower time frame, how can you get involved in this down push here to, let's say, this liquidity low? What can you do within that down push if you're watching it on a lower time frame, what can you wait for if the market has made 3 MBs down now? What can you watch for now to get back into shorts if you wanted to, right? Let's say the target's here. Yeah, a redistribution. You'd wait for an MB up, and then could you, which one of these 3 is wrong? You could either trade long here. That's scenario 1. Scenario 2 is you could wait for a break and then look for shorts. That's scenario 2. And scenario 3 is you could instantly, on a lower time frame, look for shorts inside of this leg. Which one of those scenarios is wrong? Right? So yeah, you guys are correct. The wrong scenario would be number 1. Because, again, you're more focused on the instant break and you're just sitting there going, structure, 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 it's breaking, ah! And that's getting you into this muffled location of not actually ever being on the side of price. And the person that's done the analysis, right? Because the analysis stays. Once you've done the analysis, it's relatively going to be the same. You have a context there, and now you can trade that context. And then based on the setups that happen intra-week or during the time frame that you're trading on, you can use these models for entry or whatever your actual model is, okay? So we followed that through. We were talking about how bearish this market was going to be. I looked at this area here. Some of you were looking at this area here. Both were correct. Both of them provided the same opportunity. This area provided the absorption-based opportunity, and this area provided a very clean mitigation/absorption opportunity. And you can see I even tried to follow it short from there, right? I took some break-evens down. I took a few wins on the way down, and then I started taking longs. And this is the importance of today's webinar. The understanding that even though we came into the week extremely bearish, expecting redistribution models due to this multi-time frame confluence, right? The 1 hour, notice what happened. On the 1 hour, at the time of my trading, we had MB1, MB2, MB3. So we've made 3 MBs down, and we were near, I believe, the low that we wanted to see. We were like absorbing this low, basically. The low that we wanted to see broken. I think it was on the 4 hour. Let me double check. Yeah. So this was the low right here. You can see it drawn by an indicator, but I'm just going to draw it here. This was the 4 hour low. So at this point, something that I want to talk about that's really important this week is the fact that just because you have a context to one side does not mean you can't be on both sides. However, it's really important you understand how being on both sides works. Because again, when you have a clear context, what does that mean for you? That means you have an expected ability to understand where price is likely to head, given that it does a certain number of things. So in the case there's a clean bias, which there is, which is bearish, if you have, let's say, 3 or more MBs to one side that are also absorbing a higher time frame low, what do you expect in that given moment right there that is likely to actually happen on a lower time frame? A bullish move or a bearish move, right? You guys can answer that for me. Yeah, exactly. So a bullish move. So even though it's counterintuitive, it's not actually counterintuitive. This is something that you'll learn over time. But it's the fact that the context that was extremely clean for a bearish market, with its delivery, created a clean opportunity for the bullish side. That's why my 2 best trades of the week were actually on the bullish side right here. Both of them were on the bullish side, but both of them were under the same principle that we made multiple MBs to one side. We were in an absorption area of a higher time frame, and during that given session, it met the trade plan for a very, very potentially bullish push. Now, what is, let's say we have a market, a simple market, okay? Let's say we have multiple MBs coming. What kind of MB delivery on any given time frame creates an opportunity that actually makes a bearish move more likely than the continuation bullish? What would be the rule there? So the question is, what rule would make a sell here more viable than a continuation long? What rule with MBs, right? So let's think about it, guys. What rule with MBs would create an opportunity where going short is more likely than continuing with the runs higher? Exactly. So some people are saying 7 MBs. That's one way. Some people are saying MB cluster. That's correct. But FX has it right here. 4 MBs or more. Because what we realize is that early trends set the precedent for moves. When we get our MB or our double MB, that's the precedent of the move, or maybe the very beginnings of an MB cluster. That sets the precedent for a big, big move. Now, when we get extended in a market, like 4+ or more MBs, we actually begin to get into an area in the market where the counter side push, or a bigger counter side push, is actually higher likelihood, okay? So these are nuance points. And by the way, if you're new, I'm happy you're here. It's okay. It's good that you're here. You're going to see what you're working towards. You're going to be confused. That's fine. You're going to learn about all of this stuff and understand everything I'm saying right now as you go through the course, okay? So when we go and look at a lower time frame at my 2 longs here, what do you think you're going to see on the entry time frame before as I entered? Do you think I'm entering in the first MB or the second MB, or do you think I'm entering in overextended 4 or more MB areas mostly? Okay. Yeah, mostly the overextended, right? And then there's a little bit more nuance. Sometimes you can do even like 2+, but that would require what? In what situations could you do a 2+? Let's think about it in reference to what I have drawn on here. In what situations could you potentially do a 2+? Yeah, this is a great answer right here, right? So IBOB is actually doing some amazing answers right now. Yeah, and absorption, right? So in the case that you have a very higher time from area that you're expecting price to get to and it's below that, and then you're getting, let's say, 2 or 3 MBs in one direction, there could be an argument made for going long a little bit earlier, right? So these are small nuances that you will learn over time. And notice how, as we speak about this, it, again, like we spoke about in webinar 88, it may seem subjective at the time to someone brand new, like, oh, but he's sometimes going long, sometimes he's not, sometimes he's going short in a short market, sometimes he's going long, what the fuck? But there's experience and there's knowledge that's being held here every single time. Anyone that's been here a while knows that the same thing is being repeated, right? The only times I'm going long in a bearish market is when it's meeting, let's say, the contextual framework of an overextended higher time frame MB push, as well as the absorption of a higher time frame push, and the lower time frame overextended MB push. And that's where I'm going long. And now let me show you an example of that. Let's look at this first trade right here that I took off the Triple M trade plan that I shared with you in webinar 88. This one right here. What do you instantly know about this market? Let me ask you very quickly. What's happening on the daily? What has it done? Yeah, so it's made an MB down, right? It made 1 MB down. That's good. But there we go. James is on top of the fucking ball, guys. The left to right rule. We don't just look at the fact that it made an MB down. That's great. I'm happy you can spot that. Anyone can spot that. But what is context, guys? Is context looking at the immediate break and going, oh, it made a bearish break? Or is context looking at the current breaks that have been occurring and then asking yourselves what kind of context that puts you into? This is it's a small niche thing that you can change, but it will alter the way you think about any market. Because again, a lot of people see this, oh shit, it's a bullish market. But someone that's been in the mentorship for a while might see something like this. And in this case, what someone in the mentorship sees, okay? So here's someone that's brand new to the state. Oh, holy shit, holy shit. And here's someone that's in the mentorship sees MB1, MB2, MB3, MB4, broke the MB1, actually likely to be a redistribution model. I'm going to expect the shorts down. I would never look at this zone. Let's see what happens. And this is where our members in this mentorship are getting positioned in these 3 boxes and these 3 boxes, and then on the new breaks and 3 boxes here. Whereas you have a lot of the retail side of people that are head and shoulders, or the new trend line creation, or the channel breakout, or the spring, etc. Any one of these, you can see how the retail and the dumb money concepts all intersect. You have all of them looking for their longs here, which is why when we get these moves, they become very prominent. So the first step of any analysis that you do is, yes, find the most recent range you're in. That's good. But then ask yourself, what happened before we found ourselves in the range that we're currently in? Instead of going, herder, we made a bullish break. Go, what was the story of that bullish break? Bearish, bearish 2, bearish 3, bearish 4, bullish 1. What is the likelihood? Is the likelihood continuations to take out longs, or is the likelihood to see the redistribution come down? Right? And yeah, so it honestly might even be 50-50, because sometimes we'll see a double MB and then it'll make this push, right? But what's important is we understand the contextual elements that make up this push, so that when we start seeing, right, a bearish move here, yes, it's a bearish move, and yes, right now it might continue short, but if the 4 hour or the 6 hour or whatever, 8 hour start making very clean 3 box system longs that are beginning to occur, do you think the likelihood, even though this is a first break, is to continue short now? Or do you think it's likely to continue into the 6-hour and 8-hour highs and then onwards to this daily high? Yeah, up. You're correct, up. Because it's undergoing, what do we call this? What do we call this model? What is this model right here? It's a reaccumulation model. Yes, exactly. Now, in this exact moment, right, we don't know, this is the important thing, we don't know if this is the end of the reaccumulation model or the start of one. How do we go and prove to ourselves what kind of model this might be for a potential entry? What can we do to further this context? Not wait for it to happen. Well, that's one way. But another way is, yes, go to a lower time frame, because a lower time frame is also going to show you certain things. Now, let me ask you guys something. If a lower time frame, now before you answer it, we have A and B, okay? If a lower time frame, let's say on an 8-hour, is doing this, okay? Is this a very bullish sign or an extremely bearish sign to actually maybe make a double MB lower? Yes, a bearish sign, exactly. Why? Why are we now deciding that this is now likely a continuation short rather than a reaccumulation that's ready to happen now? Well, because the lower time frame, exactly, is undergoing the redistribution model. Okay, now let me ask you B. What if price on that 8-hour did something like this on its way down? This is why it's so important to read structure left to right. So let's say it came up, there it was, and now it's starting to make this down push. Let's say it looks like this, okay? Let me draw it first, and then you tell me if it's a bearish or bullish sign, okay? Starts going. At this point, now we're going to consider this an MB1, okay? Is this a bullish sign or a bearish sign? So is this proving a reaccumulation here or a bearish sign? So some people are saying bearish, some people are saying bullish. I would say it's more bullish. Why is it more bullish, guys? For those of you that have been here a while, why is this more bullish? I'm already telling you guys it's already bullish, but why? Multiple breaks up. That's a very phenomenal. So remember, guys, before we continue with this B example, what did I tell you? What did I tell you would make this market here bullish? What had to happen? Did I say you only need a double MB or one MB? Or what did I say the likelihood of this market to go bullish would be? Like, for those of you that have been here a while. Okay, yes, Hosey has it right. Multiple MBs up and down before the push, okay? And notice that this market didn't just start going bullish to go bullish. It started going bullish. Now it's undergoing the bearish. Then it might go bullish, then bearish, and then bullish. That's what accumulations look like. So in the state that we're making this B approach, right, think about what's happening left to right. We're making a breakdown, 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 a redistribution model that then sustains itself, then another break up that hopefully finds its way to sustain itself, and then another break up. Is this a model that's creating clarity in down, that's then making the redistributions down? Or is this a model that is slowly showing the shift from a bearish to a bullish orders on behalf of, let's say, smart money or on behalf of composite operators? Yes, it's showcasing a shift bullish. So this is how I use context every week when I look at any market to decide what I'm going to be doing that week based on its given lower time frames. I don't look at the daily, okay? I don't look at the daily and say, it made a bearish break. It's super bearish. Whoo! I go, it's made multiple 5 or 4 plus MBs to the top side. Following that, it made a breakdown. Now, we know that that could be a reaccumulation, but that could mean that this week we could go and take out new lows, which we did. That's what we did. And we could do it again this week. Or we could even make a double MB down. We don't know. The only way to now know this is to step down and understand what those moves look like. Okay? This is the super huge importance of, holy shit, my room is freezing now ever since I turned on this cold air. Holy shit. But this is the importance of understanding how deep-rooted context is. And again, guys, you need to realize that this context thing, yes, it's going to take time to learn, but it's not as subjective as a lot of you think. You get used to seeing the same moves time and time again. You get very used to it, okay? So let's go back to this exact trade, okay, that we were just about to show off. So we understand, okay, that the daily made a bearish break. But now let me ask you again, guys, what is significant about this exact time frame that we're looking at right here? Is it just that bearish break, or is it a little bit extra? And what is that extra? What is that extra sauce that people are missing when they look at markets and just see the bearish break? What is the further sauce, guys? Nope, not overextended. Exactly. Again, we just spoke about it. The MBs that are currently happening beforehand. It's a left to right game. It's not a, that's right, let's go. It's an understanding of what's been occurring to understand what's likely to occur. So the fact that we have this bearish break is not a super, super bearish sign. However, when we step down to what? Our 4 hour, and we saw multiple bearish followed by bullish instantly, what is the instantaneous expectation like we spoke about? The continuations. And look what's happening. It's continuing. And what do you think I'm going to be expecting likely this week? Do I expect price to come for, let's say, highs here, up here? Or do you think I want to see price come for these lows? Likely. Yep, lows. Exactly. Now, another issue that everyone has. When price, at some point, because it's going to happen, instead of coming here, does this, am I going to cry or am I not going to give a shit? We don't give a shit. Yes, exactly. We're not going to give a shit. And the reason we're not going to give a shit is because we know, on one hand, that our edge is playing out and we're not even taking trades because there's nothing to take. But two, because everybody that we're competing against are literally sitting there baffled how their zones are not holding and how their structures are not holding. But we don't care about that because we've learned, hopefully, as we've watched through these webinars, as we've worked through the course, as we've done this time and time again, that our edge is rooted in a confirmation followed by management. It's not rooted in being correct about your analysis. We don't care about how correct or wrong our analysis is. What matters is that when we analyze a market, then we can use that analysis in the 10% chance that it's right or in the 50% chance that it's right to then get positioned. And that's when our actual mathematical edge takes effect. Prior to that, whatever zones we draw, whatever zones get invalidated, whatever highs or lows get swept or don't get swept, they don't matter to us. They're not relevant because they're not playing into the thing that we were looking for. And what's better is, in the case that a move like this happens, we miss this whole move, what's great about the next day, guys? What's great about the next day or the next week? It's all gonna repeat again. There's gonna be new setups, which means new biases, new context, new and better context, potentially, which means more setups, more potentials for setups. And if you get them, then your mathematical edge can play out. So a lot of us need to disconnect from this really dumb way of thinking where we're sitting back and we're just crying over the fact that a zone isn't holding, or the zone we drew doesn't want to react the way we wanted to see it react, or that the structure we have isn't reacting, because it's not about that. We need to understand that the only time it matters is when we're actually executing. And if we take the time to understand how contexts deliver, how we look at markets, then over time you're going to become unstoppable in the realm of being able to predict moves, right? That's what we do. So back to this bearish break from a bullish market, we can expect reaccumulation or continuations down. We don't know how far. We don't know if it's going to reaccumulate. We can tell that by some of the lower timeframes. Lower timeframes are showing us bearish breaks that are now redistributing and continuing. The likelihood is to continue that move. There's nothing really else to it. So at the time, I was looking for the continuation of this low. You can see I had this higher timeframe target noted right there. Now, oh, well, that was before, but okay, let me redraw that one for you guys. The 4 hour. At the time, it was this low. There we go. So let's see where that trade came from. Price starts coming down, right? Price hits our zone, or some of your zones, which were up here, right? You guys hit that zone, absorbed or whatever. And then from there, this was the huge news, which we didn't trade. We traded after it. Fantastic. I took some break evens. Love it. And then we took a win right here. Fantastic. MB1 starts breaking down. MB2 starts breaking down. MB3. Now, what is interesting about the fact that now we've made about this MB3 specifically? What's interesting about it? Where is it contextually? Yeah. Below the 4 hour zone. It's right under the next 4 hour low breakdown, right? So in that moment, right, there could actually be a reasoning for bullish. Now, what can I do to decide whether or not there's a good bullish opportunity here now? If I step down to a lower time frame, what am I looking for? Yeah, breaks up or overextensions. And this is why it's so important because, again, a lot of people think that just because this happened, they need to see bullishness. It's not the case. This is, once again, where you can ask yourself, do I want to step down and see what the price action shows, or am I ready to trade it right now? So this is where I step down. Okay. And look what happened. Hold on. Where's my replay tool so I can show you guys the structure and everything. Here we go. Okay. So I have this drawn here now for you guys, okay? Here's the higher time frame target right here, okay? So you know that this is the area we're absorbing. This all right here is an absorption, or we're assuming to be an absorption. And notice at the time of this setup what the market did. Here's an MB1, okay? Broke up. Then it broke down. Again, left to right. Always consider where you are. 1, broke again. 2, broke again. 3, broke again. 4. What is that showcasing to us? Based on webinar 88. Yes, 1 is an overextension, but what is it also? It's one of the prerequisites for what? For a shift, sure. For a triple M, yeah. So basically for a trade. Because we spoke about in webinar 88 how the prerequisite for taking a triple M trade is what? We needed 4 MBs or more in one direction, and we needed the contextual framework of a higher time frame to be mostly favored in a certain direction. So in this case, we are absorbing a higher time frame target, which is multiple MBs that are bearish on the 4-hour. At the same time, what is the daily? Is it an overextended MB1, or has the MB1 just started? Who remembers? No, the MB1 on the daily pretty much is overextended. Notice where it is, guys. Remember, it's an MB1. Look where it is. This MB1 has just pushed down and just, it's just made the push. It just broke through the low and it's just chilling here. So we don't know what's going to happen here. And what do we know about the daily just by looking at the daily? Is it in a reaccumulation model or likely a downwards model? Yeah, a reaccumulation model. So there's an underlying buying that's already there for the daily bias. Then that underlying buying, okay, is supported by the 4-hour absorption of a low, which is further supported by 3 MBs or more on the 1-hourly, which is further supported by your session having met 4 MBs to the downside, which is the prerequisite for a triple M entry. And notice what happens. You have this original entry here. This is also a fine entry for those of you that wanted to take it. I waited for some kind of push because I'm just, I'm testing this system too. So I'm trading it with a much, much lower risk. I'm trading this. This is not plus 7.2. This is plus 7.2 over 2. I risked half of what I normally risk. So my normal risk currently on my personal account is 0.2%. I risked about 0.1% on this trade. So it was a much smaller risk, but it was a very clear bias, and I was happy to take the risk on it. So you could have taken this one too. This one ran beautifully, but I didn't take that one. I waited. I had this up candle here. Can anyone tell me why I chose not to enter this one here? Even though it kind of worked, it got wicked after, but why did I just choose not to enter this one? Can anyone make a guess? Liquidity sweep? No. Did not take liquidity. Nope. Volume, it's kind of close. The answer is, what did I tell you I would look for in a triple M entry in webinar 88 when I look to take it? What did I actually want to see the trade provide me in terms of upside? Not volume. Nope. It's the best odds of risk to reward, right? I want to wait for a triple M that sets up the best, even to the next structure high, a very good RR. This one was just a little bit bigger and I chose not to take it. And this one was a perfect size for me, so I chose to take it. This was like half a pip bigger. Now, again, if you apply this on a higher time frame, then, it would be a lot less. But this one was also really good. But again, why didn't I take it? Can anyone guess why I didn't take this one, even though it's actually a much better trade? Because I'm a pussy, that's all. I should have taken it. Honestly, this one is a really good one, but I just didn't take it. Maybe I didn't see it, and then I got on for this one, okay? Yeah, no impulse before. That's an okay one. But again, notice the important thing about this trade. Is this bullish trade being taken in a bearish MB? Yes or no? Yeah, it's in a bearish MB. Now, to an untrained eye, does the fact that we're taking a bullish trade in a bearish MB look out of this world. Like, holy shit, do you think it looks like complete subjectivity? There's no rhyme or reason to it. It looks super weird. Yeah, of course. To any new person, it's going to be. That's going to happen. But for a lot of you that are here now, and we've walked through, let's say, this specific thought process of this, do you look at this and say, the odds of this bullish trade are so much higher than bearish that, that there's no question as to why it was a good trade? Does anyone understand that, at least? I'm going to have a sip of coffee for a second. Hold on, guys. Yeah, of course. Right? And you understand how we get to this location now, right? And then so what do you guys remember? What did I say about the first partial, if you remember in webinar 88? So this is why it's so important you show up to webinars. What did I say there? What would I look for the first partial? What have I noticed? 8RR. Yeah, so basically 10, but 8 is what I noticed. Look where my first partial was. Can anyone see? This was just under the low. There we go. Can anyone see what that partial was? What RR was it at, guys? 8RR. Took off 90%. Why did I take off 90%? Because I didn't test it far enough to know exactly how I'm going to manage. Off the double MB, I moved the stop to the next protected low, and it just came to stop me out, and I still got plus 8RR. So fantastic. That was my trade there, right? And then you can see, I mean, based on how I managed it, I mean, this went. Look at this. Those of you that are studying this form of entry, I mean, look how much money was in it. Now, I didn't catch that. Oh, but what if I could catch it? What if you caught that huge move? We don't play the what if game, as you all know. We play the management game. We don't care. Exactly. We do not give a shit. All right, and if you caught this, then yeah. If you went through the normal process, what's likely to happen if you went through the entire process of backtesting and data collecting? What would you learn about the Triple M, potentially, in terms of upside? Yeah, that you could get maybe much higher R, maybe even a 20 or a 25 R move easily, right? Because again, where are you entering a Triple M? With the trend or kind of against the trend at the time of entry on the time frame? Yeah, against. So even though it's with the trend in terms of context, it's against the trend of the entry time frame, which means that if it shifts bullish, what can that start? What can that MB shift bullish start in this market? Yeah, a new trend, a huge run, which means that honestly, for a Triple M setup of this type, of this trade plan, you're actually likely to get huge moves out of it. So you might find that bigger R is very normal. And look what I took the next day. I closed at 30 RR, and I only secured a little bit based on that management that I just showed you here. But this thing ran to this high, I think, of about 60 RR. And this one ran in one day, and this one ran in one day. That's how much is available to you based on this move. Now, again, there's losses that are going to be taken. I think I took a loss on this one before. I think I showed it. There was a loss on this one before I took the win. But you will, over time, as you start to data collect, you're going to see the data collection that's going to show you what to expect, okay? And then that's what you can trade. That's the beauty of following what I teach you guys here, okay? Now, back on the train, okay? We get this move off of it. Is this low at this time still the same low? Yeah, you can see this, right? Same 4-hour low. So in the case, once again, guys, in the case that this gets under here and we check a lower time frame and all those conditions are met still, that it's overextended MBs, it's making the same MB thingies, can a Triple M work using the context that we're just under this low again? Yep. And that's where I took the second trade. Like, this shit's insane. Look at this. Okay, now we're going to go into the second trade. Let's go to the 1 hour first. Let's replay mode this for you guys. What is true about this trade, guys? What happened to the MBs? Are the bearish MBs still holding? Oh, wait, sorry. Hold on. To the next trade. Are the bearish MBs still holding, guys? Yeah. Now look how many there are. 1, 2, 3, 4, 5. There's 5 MBs down. The new high is here. And notice what I had drawn here. You guys see where I have a target here? Why did I put this target here even though it's a bearish range? Why is that target there for me? Because it's the protected high of an overextended hourly which is still where, guys, in terms of the 4 hour? Where is it? Does anyone remember? Let me go lower here. Because again, this is how you need to start thinking about multiple markets. Where is this in reference? After looking at the 4 hour low. Exactly. So all of this, if we just put a box around it, what do we call this price action potentially? What is this already being thought of in the moment? Yes, sir. Absorption. And what makes that absorption even more prominent in regards to the 1 hour time frame now that we're looking at? What makes it even likelier that this is going to be a true absorption that's going to result in some kind of up move? Yes, overextension. So not only are we higher time from absorbing, we're also overextending the 1 hour by a big fucking fish. Okay? And then I drew this 4 hour zone here. So notice that we have multiple things allowing, okay? We have multiple things allowing for a potential bullish push, okay? We have a 4 hour, I wrote 4 hour minimum. Notice where this 4 hour is. This was the 4 hour break, and here's the zone. Why did I draw this 4 hour minimum here? Why did I draw this at this time? What could I use this zone as? Yeah, a target. Exactly. It could be used as a target, as take profit, right? And notice what it lines up with, guys. Look at the three things it lines up with. It lines up with the 4 hour low absorption that we're currently targeting. It lines up with the 1 hour, that's this one right here, protected high that has multiple MBs to the downside, right? So in the chance the price gets here, at that point, is it likely to go long or short? Yeah, short or long. Honestly, it's like a 50-50. So at that point, I want to be out because my confidence has done what? It's now, my confidence from here of 90% has dropped to what? Not to 0, but to 50-50, right? So if my confidence at this point drops to 50, and this is a large zone, but here it's 90, what can I do within this area right here? Long. Exactly. So the premise of today's webinar is to show you guys that a bearish market or a bearish context does not mean that you need to be forcing shorts. It doesn't mean it. Now, if you're brand new, yes, you should establish a market direction and then wait for what, guys? Let's say you're short on a market. What should you wait for? Should you look for these longs, or should you wait for price to get to a zone and then confirm shorts? Or wait for a redistribution and then look for shorts? Exactly. If you're new, or if you haven't understood this extent to, going further in context, your general premise should always be, it's overall bearish. I'm looking for the bearish. I'm either going to trade a bearish zone, or I'm going to watch for a redistribution. It's very important. As you get better, a good context means, what does it really mean to have a good context? Does that mean you have a high confidence in what is likely to occur? Or does it mean you have a low confidence? Yeah, high, of course. So if you have a high confidence in what's going to occur, does that mean you have a high confidence in what's going to occur on the bearish side or the bullish side, or just one side? Yeah, you actually have a confidence of both. Now, when you're starting out, you should focus on the one side so you get used to it. But when you have a full bias for something, you actually have confidence on both sides, because since the story is clear, okay, any given extension or overextension in a move, or a clean redistribution, or a clean reaccumulation back up into a zone can be traded, because now you have areas within which you're going to have 90% confidence intervals to get positioned. And that's why I took this long here, right? Because even though I'm extremely bearish at this time on this market, the exact momentary setup here where we're under the 4 hour low still, we just made an MB2 on the 4 hour. We just dropped down through it. We're making a 1 hour that has 5 MBs. We're down below it. We're in our session, and in our session, we have 4+ MBs to the downside. What can I look for right here? Triple M wise. On the overextended MB. Yeah, a long. And let's take a look at what it is that occurred. Okay. Wait for our session to start. Here we're in our session. I think I might have taken this even after the session. So look at this. Look what it actually does to the top side. Look at this. 1, 2, 3, like 500 MBs to the top side. Okay, let me get rid of this gray so it's not too confusing. We have this zone up here. We have the 4-hour low and the higher time frame target. This higher time frame target is what? Who remembers? So I'm gonna ask you guys stuff like this because I want to see if you remember. What is this higher time frame target? Some people are saying 4-hour. Nope, it's a 1-hour high. You're correct. Some people said 1 hour. 1-hour high. Now, why are we using a 1-hour high? Even though it's a protected high, right? It's a protected high. Why are we using that 1-hour high? Who remembers? 4. Yep, Elytra got the right answer. 4 plus MBs. That is why we're using the 1-hour high, because now the likelihood has shifted to potentially getting the absorption of that area before potential continuations, okay? So we have multiple MBs to the top side. All good. Now, could you, if you were very bearish on this and it was in your zone, trade a short off of this triple M? Yes or no? Or this one? Yeah, of course. Look at this. Multiple 4 plus MBs to one side. If you're very bearish, this is a fine sell. And who knows, maybe it even holds itself. Why did I not take a sell here, guys? What did I show up to do? Why did I not take a sell here? Let me ask you this. Well, yes, looking for longs is right, but when I showed up, what did I establish for myself? Right? Yeah. I established the bias and a context. And what am I going to do if that context is not delivering the way I want it to deliver? Yep, I walk away. Perfect. Hodge got it. Walk away or reevaluate. But usually walk away. There's nothing to do. The day that I'm looking at it, I'm wrong. Yeah, play league. Exactly. I'll go play some league games. Right? That's it. There's nothing else for me. There's no reason for me to sit there and try to force things. Right? Because I know what I'm looking for. But then, all of a sudden, we get MB1, 2, 3, 4. Wait. 4. Okay? So I actually took this on 3 MBs, right? 1, 2, 3. Yeah, I took this on 3 MBs. So I actually did it wrong. So I took this original long right there. It was not actually 4 MBs yet, but it's fine. Took an instant -1. All good. It happens. But now what's being met, guys? Is that 4 plus MBs to the downside based on the trade plan that we spoke about? Does the higher time frame bias still stand in terms of 90% confidence interval below these areas? Is that higher time frame still overextended? Is the daily still with that first MB break that's relatively overextended? Is the daily still within a potential reaccumulation model? Yes. Notice how the 1-minute chart, like a lot of traders love to think, didn't change that higher time frame. Nothing changed there. Everything remained the same. We have tendencies to tunnel vision on the thing that we're looking at right now, and it will make us change our complete minds about that market. Some people that are like, okay, I've done all the research on Tesla. You know, I see its sales, I see this, I see that. Beautiful. Lays it out, shows their boss, boom, look how good this company is. We should value it. We should get in it. And the boss is like, yes, we should. Let's do it. And the next day they start buying Tesla shares. And that day, the candle, the first hour candle, drops. It starts going down a lot. In that moment, most traders are sitting there going, it's bearish. Get the fuck out of the move. Get out of the move. And then a week later, or a month later, or a year later, Tesla is up 200%. Now, the problem is that many people tunnel vision on that move, right? They see that one little flick of that candle. They see many MBs to the top side of the candle. They see many MBs to the downside. It's going to make a double MB. It's going short. It's going short. I know I have my zone here, but it's going short. Ah! And at that point, they forget the fact that they've just done all the analysis prior. They forget the fact that the 1 hour was showing them that the high is the likely move, the high run. They're forgetting that the 4 hour is still in the absorption, and this is all under that area. They're forgetting that the daily is overextended on the MB1. They're forgetting that the daily also has 5 MBs to the top side and is likely in a reaccumulation model. They forget all of it. They forget their fundamentals of Tesla. All they care about is the fact that the second they entered, the move is starting to go down. Therefore, the company is no way it's valued at the value they thought it's valued at. You cannot tunnel vision on any given day or on any given trade. The second you do that, you're going to murder your bottom line. It's going to get destroyed. Okay. So a lot of you need to realize, and the reason I teach you every single week and every single webinar, the reason I ask you guys, okay guys, where's the daily? Where's the weekly? Where's the 4 hour? Where's the 1 hour? The reason I ask you to repeat this to me isn't just because it's fun. Well, it is kind of fun, but it's not because it's just fun. It's because I need you to start to think the way I think. And the way I think is always remember where you are. Never forget that, because once you're tunneled in on your given time frame, whether it be a 1 minute, a 1 second, a 5 second, a 1 hour, a 4 hour, it doesn't matter. Whenever you're keyed in on your time frame, a lot of you are going to basically quote unquote lose your minds over any given move, whether it's in profit, at break even, or even against you. Right? Many people have this problem. They get into a trade, it starts going into their direction. They're like, oh, must secure gains. Yes, I know I want to target 8RR, but I'm at 6. Must secure gains. And they forget why they did what they did. They forget why they underwent the analysis they went through. They forget why they spent 1,000 hours, the first 10th of it, going through the course, and then the next 900 learning a system. They forget all of it because we get emotionally attached now to the thing that's happening. And I'm telling you today, as we do this, to in your mind consistently keep yourself, basically keep asking yourself, what is the current occurrence of price? What was I looking for? And is that happening? And if it is, there's no reason that I should not be executing, right? Instead of what we normally do. So let's keep going for this trade. We're 4 MBs in or so. We get a triple M. You see this triple M, guys? Is that providing great RR? It actually was really amazing RR. I had to move my entry. So this was literally a 0.5 pip stop. So I had to move it to 1 pip. Again, same thing. Made it a 1 pip. Is that a good entry, guys? Yeah, it meets every single rule. All right, and onwards. I'm going to tell you guys right now. So far, for those of you that are looking for ways to manage, okay, this is what I've done so far for my triple M management, okay? When the move starts, I follow the FMB's candle management. So basically, the wick. So as this made this break right here on this candle, I moved this to break even. Okay? Because on a lower time frame, what is this? If price gets below this, it should only come a little bit under, like absorption, and then it should go long. So at that exact point on this candle right there, I moved to break even. Does everyone understand why? In terms of the way that I think and teach you guys to think about break evens and stuff. Yep. Right, so in my mind, this candlestick structure has delivered or created, this FMB structure has created a protected low. The protected low would be this one right here that shouldn't be intercepted unless for an absorption. It does come for the absorption, fantastic, and it goes long. At that point, I was already at break even. It hit my first partial very, very quick, secured it. My last area that I was looking to just take my partial was here. Now, why was it here? For one reason, I don't have a full-on management for a higher time frame just yet. For number 2, it was the area I expected price to reach for. And number 3 is it was Friday. And like I like to say, if I'm not in a lot of pips of profit on Friday, I don't want to usually hold. I'm just not interested in it. Prices can gap. They don't always gap. Mostly holding is fine. But on very low time frame, entering on Friday and then trying to hold through the weekend is not always the best idea. Okay? So this price delivers very easily, delivers that partial. And then, look, again, like we spoke about, look what this price kept doing. Like this thing goes crazy. I think it closed somewhere up here, right? Yeah, like this thing just went for another 60 RR. It went 60 RR. Now, all right, guys, really big question time. Did Anton catch his 60 RR that he can now market to everybody? Nope. Because again, I'm following my system. Okay. And again, just for sake of clarity for all of you guys, even though I had a really, really good week, this was not plus 10 RR. This was plus 5 RR on my personal because again, I was risking half of what I normally risk. And this was not plus 8 RR. On my personal, it was plus 4. Okay. So I was risking half of what I normally risk. And then my other trades did really well, right? I took the break even here, which was minus like 0.5, minus 1 or so RR, because that's just how break evens are for me. And then I took this one here, which was plus 5.7, which was actually plus 5, or like plus 5.7 minus commissions spread. So about plus 4.5, plus 5. So overall, like you can see, I had an amazing week. I'm up like, I think 14 RR on the week or something. Had this plus 5 as well this week, like plus minus these 2 break even. So yeah, around the plus 15, 20 RR or so. I don't sit there staring at it. I don't really care. I just follow my rules. But it's one of my best weeks of the start of the year. Since 2023 started, it's one of my best weeks. So just for sake of clarity, which is why I came today and said, wow, you know, what a week we've had. Because I've also, over this week, saw a lot of you catching beautiful trades. And a lot of you were, the best trades a lot of you caught were to what side, guys? Bullish or bearish? Can anyone tell me? If anyone remembers the chats. Yep. Many of the trades of everyone that caught that were really, really good trades, including one of our own members that posted his step-by-step, and he's still in it actually, was bearish. And he actually secured more R than 6, 12, 18. He beat me. He beat me in RR with one trade, okay? And it was to the short side. Now, why did his short side pay off so much? Was the bias still for the week extremely bearish, or was it bullish? Bearish, exactly. So going back to the original thing, if you're new and I tell you to focus on the side that's currently delivering, is that going to take away from your bottom line, or is that going to add to your bottom line right now and then you can refine later? This is why I teach you to do this. Because if you're on one side and you understand how that side is delivering, that's where money's made. Because that's the moves that are going to be relatively prominent and large. These longs that I'm taking are not likely to set off a brand new storm that goes long. Yeah, it can. Right? This could set off a move that just goes. But the likelihood is that this is going to set off back into shorts or come back up here, redistribution model, and then go short, right? Now, guys, if I missed any of your questions, basically before 12:55 p.m., please go ahead and repost them for me, and I will answer them happily. Or if you have a question right now that you want to ask, you can go ahead and ask that, because I kind of got through what I wanted to talk about today. So, iBob. How do you usually react when you hit something like 30 RR? I feel like you've done it so many times that you're like, okay, cool. That's exactly how I react. And at the end of the day, this is not 30 RR. This is 10 RR secured. Okay? That's 10 RR secured. Yeah, the trade ran to make 30, right? Yes, last year I hit the 400 RR. Overall in the trade, I secured how much? Does anyone remember? I forget. Like about 20 something or 30 RR raw that I secured on that based on 400 RR. I don't have to sit there and be like, oh my God, oh fuck, nah, 30 RR, it's crazy. Because the reality is I'm not sitting there holding full positions for 30 RR and going, I just made 30% of my account. That's not how it works in any state of the mind, right? In no way is that how it works. So I don't sit there like, I'm not reacting to it in any crazy way, right? I react to it just like I would react to a loss. I go, okay, good. This is adding to my bottom line. Because when I lose, I know that it's part of the edge. And when I win, I know it's part of adding to that bottom line too. And that's it. And I just go forward with it. Would you recommend to take the entire position at 1 to 10 profit during profit evaluations due to the limited amount of time available to pass? Is this a good idea? That is a fine idea, yeah. That's actually a decent idea. Now, again, I'm not going to tell you exactly how you should do that for yourself. But yes, if you have a system that can consistently hit 1 to 10s, on a prop firm, if you risk 1% and hit a 1 to 10, that's it. You're passed. Easy as that. Right? Hey, Anton. So I basically had this original journal, which is only 4-hour structure and context, which again is fine, right? This is, before I read this, I'm going to do one thing for you guys quickly. Anybody that wants to, name a market right now. Just one market. The second we have a market, I'm going to stop. Not Bitcoin. Okay, GU. We'll go with something that we haven't used before. USD CAD. Okay, we haven't looked at USD CAD in a while. Not looking at Bitcoin because it's just stupid. So what is true, guys, about me just using one time frame on this? Is there still a way to view multiple time frames of this one time frame? Yes or no? Yeah, of course. So if I wanted to go through the exact same steps that I normally go through, it would be harder because I cannot count the MBs or I can't really see them exactly, but you can still work around a context. For instance, I can do this, okay? And at this point, what I can do is I can say, okay, from left to right, we had a bearish market making bearish MBs. Let's assume that bearish MB this bearish MB here was created by this high. Great. We made an MB1. That was probably created by this down push. Boom. That held. MB2, it made a reaccumulation model, okay? Did it break next? Yes, it did. It made an MB3, but that's now an MB1 in terms of new MBs. Probably made by this low or this low. We'll call it this low. Made an MB2, absorbed the MB2, made an MB3. Okay, so right now, this market is within an MB3. That's all I see. This is the range we're in on a higher time frame, and that's an MB3 is what I would call it, okay? So the likelihood is still that, this market is It could play around here for a while. The overall prominent target would be here if you're just using this time frame, but now we can step down to see what's going on. Now, on a little bit of a lower time frame, what we know is true about this market is we had this low, that created this high, and that broke. That made an MB1, and that came from this high. Boom, MB1. And we'll actually call this the MB1, okay? And now we're inside of an MB1 break. Now, before that occurred, we had a multi-bullish market. What is this model here? Is this reaccumulation? Yes, it is. So this is a reaccumulation model. Okay, so that's supporting the potential run on this high. That's good. Okay, now we can step down to a lower time frame. Now we can step down to the real 4 hour. Multiple MBs going long and short, long and short. What is that? Accumulation or distribution? Yeah, mostly accumulation. So we have an MB1, MB2. So at that point, if I really want to, I can trade this area here. There we go. And I've just done multi-time frame analysis with one, but it's a lot harder because we're kind of more so guessing, but it's fine. You can do that. Now notice what happens if I go to a daily. Watch what happens. We pretty much drew the exact same ranges, and look what range we're in. There it is. It's that same range, right? MB1, MB2, or maybe on a 3-day, it's that range. There it is. Low, high. Boom, we got there, right? Then let's see the ranges that we found here. What are they? Look, they're the daily range. There's that break. That's the bearish range on the daily we're in. So notice how, you know, based on whoever you are, it's not about the time frame, it's about the price. But we then use the time frames to see that price in a much, much clearer light. We can understand what MBs we're in, how many we've made, what kind of directional bias we can actually have, what kind of trend is being created, etc. You guys see how we arrived at that? How I didn't have to how you could if you wanted to sit on one time frame and just read the price. You know, a lot of you, if you really, really wanted to, could trade a 1 second chart only. Literally. This could be you. You show up here. Let's just go left. Whatever. Let's go left to our here we go. We're in our session. Boom. We're in our session. Let's replay mode this. Boom. Okay. Now we zoom out. Again, could be your entire day. You go, okay, we're making bearish MBs clearly. We're in big bearish MBs. Lower time frame, we made an MB, maybe an MB. We broke long. We made a redistribution model, holding the MB short. MB number 2. Okay, we made a double MB. MB number 3, MB number 4, we made a redistribution. MB1. Okay, I can see this as potentially holding this down move currently just because of this redistribution model. Okay, so we made the MB1. That's what we're currently holding. And that's coming from, let's say, this MB up here. Okay, now if we step down to a lower of the actual 1 second, what do we see is true? We see price has gone MB, 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 broke bullish, broke bearish, broke bullish, redistribution model, broke bullish, and now I would probably look for this to be a redistribution model. So if I made 1, 2, 3, 4 MBs up, what can I look for right here today? Triple M. Yeah, for a short, right? So I don't know what happens. Okay, so we make 1, 2, we make double MB up. Okay. Double MB up, that's 3 MBs. Let's see if we make a fourth. Oh, one more, guys. Okay, so we don't, but we make an MB1 to the downside, MB2, and at that point, that's oh no, it's not a double MB yet. Let's see if we break down again. So there we go. That's a double MB. And at that point, you might even say, okay, I'm happy to take risk on this. So I'll take my risk on my last up move before the down move, which you could count as these guys right here. Protect what? Like, I don't know. I mean, we want true downside. So you could do something like this. I would protect this high. So honestly, at this point, what I'd do is I'd enter off of this last up move. 1 pip stop, just like that. And now we can watch. Breaks down. Okay, so new MB made, nothing to do there, and breaking down. But again, this could be the way that you approach a market, okay? Made 1, so this is now validating a double MB on the higher time frame, right? 1, 2 is making the double MB now, which means that price may want to trade up into here and then go short. And again, right now there's no clear bias for it, but breaks down, I mean, it just falls off the face of the earth very nicely. Cool. Right, but now it's made 1, 2, 4 MBs down. We can't really have a triple M on a 1 second, sadly, so we're not going to be able to follow that. We made an MB break up. Now, this could be a redistribution model now to continue that short. Let's see if we want to do that. Make an MB2, see if we break down for the distribution model, MB3, and we break down. So at this point, that might be your trade. You might take the sell off the first MB break, protect with, let's go 1.5, and you can start targeting new lows as your redistribution model, right? And we get stopped out. There we go. Nice. And then you can follow this over and over again. Now, this is why I prefer to do multi-time frame analysis, because at a certain point, I feel like I'm starting to guess rather than looking at multi-time frame, right? It's a lot harder to analyze just one time frame over and over and over like this. The importance of understanding that you can, aka the golden goose, is in the fact that then you can go and prorate what you're seeing to another time frame. So when I look at any time frame, and I'm sure you guys remember this, you probably have seen this happen many times in the mentorship. I'll look at a time frame of like a daily, and I'll be like, let's go look at this on the 3-day. And you remember that. Say I if you do. Aye, Captain. Exactly. And sometimes I'll just stay on the daily. Now, can anyone guess why sometimes just by looking at the daily in 1 second, I can say, let's go look at the 3-day or a weekly? Why can I do that? Clarity, yes, but to give you the simple answer, it's the golden goose, right? It's this way of analyzing where I look at it, I see what's going on, and I go, I can't really see on the 1 second what's happening. I want to step up to a 10 second or a 1 minute. So does everyone understand the importance of time frame and why we use time frame, but we don't like necessarily sit there going, the 1 hour. The 1 hour is the retail fucking golden zone, right? This is because that way is going to destroy you. Now let me go back up and read his question because I just went off on a tangent for no reason. So only 4 hour, great. I decided to make a new journal and test every zone which I took in the first journal, but with a confirmation, a 1 hour FDMB, and the results are much better. Very cool. I think that this has very high potential. Oh, that's all? I really just went off on like 40 minutes for like nothing. So let's see what we got here. So this was only the structure, and already very profitable, very clean, 4 hour, and you still accounted for commissions. Very good. Looks clean, looks perfect, no problem. Then you added a confirmation. And you brought up your commissions because it's a lower time frame. Very good. Love to see it. And yeah, it got much better. Right? Did it? Let me double check. Very clean RR curve. 300 trades, 300 RR. 300 trades about... I mean, they're honestly about the same, but now you have a little bit of confirmation, which I would say is better because now, with that confirmation, you can have your own personal contextual refinements over time that you decide... Based on this confirmation, I don't actually want to take this trade. Versus if you're just trading the one time frame, just like you saw me just do it on the 1 second, if there's a trade, you have to take it because you don't know, right? You don't know what's happening across other time frames. You're just like, well, it's meeting the redistribution model. Might as well take it. Instead of, okay, the 4 hour is good. I love it. It's clear. Now let me confirm on the 1 hour. And then if you're used to seeing one thing happen on the 1 hour and it doesn't happen, now you have a way to step away if you need to, right? Versus the kind of force to trade. So yeah. Looks good. We have a good context. Can we just enter on the first or second MB's S&D on like 1 minute or 5 minute without confirmations? Yeah. I mean, that is confirmation. A good context is its own model. And then the double MB in your case here is the confirmation, right? Don't forget that just because you're not like, okay, 1 second, I'm Mr. mentfx now, need to watch my double MB. Just because you're not doing that doesn't make you a trader that's not confirming, right? If you have a way to go through and look at SSC, if you look at structure, your S&Ds, if you use those across timeframes or even one time frame to decide on an overall bias and targets, and then you have the move that you're looking for, whether it be a redistribution, a reversal, an MB or a double MB happen, and you enter on it, that is your confirm. You're doing that work, right? That is the work being done. You understand that? Yeah, beautiful, beautiful week, guys. Such a beautiful week. Also, very quickly, guys, Monday, tomorrow, it's a bank holiday, okay? Bank holiday. Don't go crazy. Don't get greedy. Bank holiday tomorrow. Likely to see the back and forth chop. Let dumb money do their thing, okay? Don't go too crazy. If you see a really good setup, by all means, no problem with it at all because moves can happen at any time and it's not really, it's independent, but bank holiday equals much less liquidity in the market, means much less likely probability of an actual move that you're used to seeing of occurring, right? So just be aware of that. Like I won't be trading tomorrow at all. Tomorrow is a sleep-in day for me. This is EU for me. Let's take a look. Euro USD today. You have the MB1, 2, 3. I mean, like 3 MBs and it's not a cluster. It's okay. You might see a pop, but not for me. if I was trading this, if I was to trade it, what I would do, Elytra, personally, is I'd 50% the zone and only trade there, or even this wick right here. Because then you're looking at not taking anything here, and then you might even get an absorption play off of that last tiny zone instead of this whole zone here, right? And you can take that absorption play potentially long. That might work. This, I think it's less likely, right? Because again, as we went through the multiple timeframes just now, relatively, we're seeing more bearishness. But again, Elytra, I also know you're a very good functioning member of this mentorship, so I'm sure you know what you're doing. And if it's clean for you, then by all means, you should follow it. But yeah, personally, I would further refine this or like not trade it at all, right? Like I'm doing right now. Instead, right? So I'm almost like you, but instead of waiting for this, what I'm doing is I'm following the short now until it shows me clarity for longs. And that's where I'll start watching for longs, right? So even though you're watching for longs already, I'm still short, and I'll probably take shorts if I get them. But if this starts to happen, then yeah, I'm going to shift my bias, right? But this could also mean that since you're long here, as I'm taking my shorts, you're taking all these losses until we get to like down here and then it goes long, or until it absorbs and then you're just sitting there on the sidelines, right? So it's just that's up to you, of course. It looks fine though. I don't see anything wrong with it. The only thing I see wrong with it is not clustering, right? You have this unmitigated MB right here before this one got created. So not clustering and 3 MBs in a row and daily overextended or was overextended. Just made an MB breakdown 1. It's okay. Maybe if daily makes another breakdown for a double MB, this will be good, right? Because look at this, guys. Remember, the daily right now is very close to making the double breakdown, okay? If you notice this low, literally this low right here, if tomorrow it somehow makes its way right here and closes, that'll meet the double MB standard. That's it, right? And maybe it's already met it on like Owanda or something, right? Based on who you are. No, so Owanda doesn't have it. Like on some, because of time zones, it might meet it. Yeah, so like none of these are meeting it. Yeah, so all of them are the same. So if you just get a candle that comes here and closes, that bias that you just sent, Elytra, becomes almost 30% better. Right? Do you understand that? Because now that 2-day entry is based on the fact that the daily went from an overextended bullish into a double MB bearish, which is now likely to make that push. But right now, it's in a bearish context, right? So again, tiny things can make huge, huge differences. Where are these trades made on 1 minute and not 1 second? Yeah, those are all 1 minute. All the trades I just went over with you guys on EU were all 1 minute trades for the triple M's. This trade was the 1 minute triple M, and so was this one. Both with the same rule. The 1 minute had 4+ MBs to one side. The price was near the low of the MB push, right? The overextension of that push, and I entered on the triple M, the bullish one. Same thing here. Exact same. Enter on the bullish triple MB. Triple M. No 1 second, no 5 second, no 15 second at all. And you could do this on a 15 minute too. There's nothing wrong with that, right? Like, look what happened here, guys. Like, really think about what happened here. Multiple MBs to one side. And do we get a triple M here? Let's see. Multiple MBs to one side. You kind of got some triple M's here, but you would not trade these due to upcoming news. And you would know that the news is coming up. But yeah, I guess there's nothing here. Maybe a 30 minute. So news passes. After news, there's a triple M right here that you might have been able to trade if you wanted to, right? That would be like your only opportunity, but that was after a break already, so probably not. I mean, this was also triple M, but it was a very, very big stop, which I would prefer not to take. But you can apply that same thing cross time frame, of course, as anything can be applied cross time frame. So yeah, trade 1, we went over that. Trade 2, we went over that. Very simple. Before taking this 4 MB overextension, I was just following the normal cluster, and I looked to take the sell here. Right, we had MB1, MB1, MB2, cluster, MB3, looked to take the trade here, took a break even on that, entered the short, took a break even, made the 4 MBs, and then I entered the long off of that context. So that was a break even of the week. Took this plus 5.7, very simple. Went from bullish to bearish, went MB1, MB2, cluster, MB3, entered on the clear zone. Confirmed, took that down, exited at plus 5.7. There was a double MB against price, past 5RR, which is one of the ways that I will exit. So exited that. Yep, plus 5 right here as well, after 2 break even. So price came into my zone, watched it take a trade, broke even. Then I actually highlighted this, guys, if you guys remember at the start of the week. Really clean. Look at what happened here, guys. A bearish bias, and look what happened. Who sees? Tell me what you guys see here. Yep. Webinar 88, guys. 4 MBs or more into the top side. Triple M, entry. Triple M, entry. Look at these. Right? These are 2 great entries. When you say cluster, is that just back and forth in the market? No. You will learn about clusters. Clusters, to put simply, are MBs that are mitigating each other to their deepest possible point. And it can be 2 or more MBs, basically. But you will learn about it as you work through the course. These are all, so basically, to put it simply, every single terminology term you just heard today is covered at a very deep level throughout the course. But this is why it's so important and why I stress the importance of making sure you watch through everything, because by the time you come out of it, you're going to be, holy shit, what the fuck? I'm like a god and I don't know why. That's going to happen to you, and it's happened to everyone that's watched it fully through. And you know, those of you that have been here a while, guys, feel free to back it up. If any of you that have been here a while, please let everybody else know. The truth is, despite the fact that it seems absurd that you have to watch so much stuff, the second you finish watching it, you sit there going, I understand everything. Now the only question is, what kind of system do I exactly want to trade? And then let me go and collect data on it. That's really all it is. And I don't think I've ever seen a place that's able to do that to someone, where all they really have to do is watch through once and really just pay attention once. And they will have an understanding unlike any other that they can now build a skill around that will last them the rest of their life, right? And that's not to float my goat or whatever, but it's to inspire you to realize that there hasn't been a single complaint from someone that has finished everything, right? And that's a huge thing. Like, I pride myself on that because I hope that I provide good education, and the fact that I see that happen time and time again it's fucking inspiring as shit to me, right? And hopefully to a lot of you. Hopefully, as you're here, if you are brand new, you're inspired after you hear this to go, you know what? Fuck it. It's 150 hours meant. You got it. Easy. That's nothing. That's 1% of 10,000 hours. Let's go. Call it. Let's make it happen, right? And you're going to be ahead of everyone. You're going to come out at the end of this, and you're going to be showing up to webinars happy, ready to go. Maybe you'll get another extra kick or another extra gem as we keep going, and you'll be working on yourself, and you'll know exactly why and how you're working on yourself. And that's my entire job. That's all I've ever seen myself as doing. So yeah, but yeah, beautiful triple M's up here, right? Those played out nicely. And then this was my +5. I took a trade off of this follow through. So I kept following this on a 15-second or a 5-second, confirmed it up here, and took that short. Let's actually find out what we took here, because it looks a little bit weird. So I want to show you guys what actually happened here. So 30-second made multiple MBs, started making them. Nothing to look at there. 15-second, same thing, making bearish MBs, looking good. 10-second, I think it was the 10-second, but maybe it was the 5-second. Let me double check. Yep, it was the 5-second. So does anyone see what this area here was based on? Look left, guys. Just really quickly, look at it. Decide why I was willing to take this, and then give me an answer. What kind of model is being met here? What is the model? Someone said S&D zone. Someone said double MB. And our good boy Ibob, who's been on fire today, and so did Hosey. Redistribution. Watch what happens, guys. Left to right. Bearish, bearish, bearish. MB to the top side. MB1, MB2. That's a redistribution model off of an area where I expected to see shorts. You can see I tried to get short like twice already. Reconfirmed it in here. Let's take a look at that. MB1, MB2, entered on this candle right here. There it is. Well, I put the limit, or not limit, but I market entered off of this up candle right here. And right there was my entry point, right? MB1, MB2, entry, off we go at this candle right here. After it breaks, boom, I move to break even. And that's it. How long is the whole course? Under 150 hours, but over 100 hours. But as I love to say, that is asking close to nothing of you to learn a skill that you will then hold with yourself basically for life. And then in the case that you want to pursue trading full time, you know exactly what you need to do that. I can watch that 4 times a month. You think it's more than 150? 90 webinars times 2 is above 180. Oh, really? Well, under 200, over 100. There you go. Shit. All right, either way, it's a doable amount of time. And the reason just so you guys know, I say 100 is because as you hit the 100-hour mark, you already have laid a very good foundation of what to do. And then as you keep going, there's many nuances and refinements. Like the webinar today, right? What did we speak about? We spoke about the importance of understanding how you can be both-sided on a good context. We spoke about and showcased how you can use trade plans and add trade plans to your tool belt. We sat here and spoke about how understanding redistribution or reaccumulation models can get you on the right side and then looking at that cross time frame. These are nuances and refinements. These aren't necessarily new things, right? I've been talking about this stuff forever, but I'm giving those of you that have already put in that work the ability to see it in a completely new light, and potentially, you know, for those of you that are so confused, to approach and look at things a little bit differently. So yeah. Meant on webinar 1,300 guys. It's only 100 hours. Nice. All right, let me go back up. I missed some questions up here, so I want to make sure I hit those. Where were we here? This is you. Where are these trades? Yeah, we want to please show the structure tool with an MB and pullback rule. It's on right now. I just have it very faint. It's right here. There it is. Beautiful. Yeah, like we've just been following this ever since right here, right? Had some weeks here, took some wins, had a little bit of misunderstanding here about what exactly wanted to happen, and then boom, we're in clean context that we're following now. Very good. Very nice. Little late. What's up, all? What's up, man? Opinion on new refinement on a 1 hour that I posted an equity curve tab yesterday. Let's take a look. And yeah, by the way, once again, guys, huge congrats to Dan. Again, he took a short. He was following the shorts. We spoke about the shorts. We said the shorts are most likely last week. He followed that down. He's still holding this. It's absolutely beautiful. And he posted his entire breakdown for you guys. Higher time frame. What was he looking at? Why? Let's see. Let's actually have a quick read over it. Larger daily zone. If we are 1 hour, 4 hour, double MB up, that's good context for me to target this area. Cool. This is after understanding the higher time frame bias and knowing we're expecting some element of a pullback potentially. Very cool. No problem. Let's step. You know, I'm going to quickly go boom, 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 boom. All right, let's go through it. So daily, beautiful. He has a daily bias established. Fantastic. He jumps lower. What does he see? 4 hour zone is marked out. I prefer using the extreme zones. Cool. Makes sense why he has that then. This was after an MB redistribution model. Look at that. Bearish, bullish into bearish. That's a redistribution model. Fantastic. My trade system is that when it's against the bias, I want to see clear double MBs. When it's in line with the bias, which currently is sells, I'm biasing, I'm happy with 1 MB down. Now for people that are sitting here like, Mr. Ment, do I do 1 MB? Do I do 2 MBs? Do I do 3? I don't know how much. This is how context works. I'm happy. I need a double, a clear double if I'm going counter or going counter to a bigger zone. If it's redistribution or continuation, I'm happy with 1 or 2. That is context. Now again, to the outside eye, is that subjective? Yes, it is. To the inside eye that knows what we're looking for, is there subjectivity behind I can take a 1 or a double after redistribution? No, not at all. That makes a lot of sense. I want to see clear double MBs when it's... Okay, we went over that. Yep, cool. So wanted to see shorts from there. Fantastic. 1 hour. 1 hour started breaking back bullish, creating a couple of MBs upside. Due to the bias, I was looking more for a 1 hour trade bearish. So he was already looking for bearish. So he's waiting. Price doesn't have to go back to the 4 hour zone at all. It'll do what it wants. Exactly. So if it starts showing you bearishness from an area you expect a bearishness, we can look bearish. And that's what he starts to wait for. The zone was messy, so I went down to a lower time frame. One of two. 15-minute tapped into my higher time frame zone. Why use a 15-minute for my setup time frame? It's high enough time frame to determine a break of structure. There you go. Why did he use a 15-minute, not a 5-minute? Because it was high enough for him to see that this is a clear break, and he wants to follow it now. Great. Not going to sit there getting involved in 1 to 5-minute trades personally from a 4-hour zone. Fantastic. Exactly what we teach in the mentorship. It's called the cause versus effect. It's called the size of the zone versus the size of the ranges of a given time frame. Using every concept taught here. Beautiful refinement. 5-minute created an MB to the downside. So now you have confluence behind the 5 and the 15, and at the same time, a confluence of clear zone. Why? Context. Wow, who knew? Price is heavily bearish across multiple timeframes, has created what I would have traded on a 15-minute, and has done the same thing on the 5-minute with a nice zone, so therefore happy to use it with the context as the 15 minutes doing the same. Again, do you guys see any difference here in terms of the way I teach you to use the concepts? Does this feel like a brand new usage of concepts, or is this the same thing? Who can answer? Is this the same thing that I pretty much do? Or is this a completely different approach to context? He has moving averages, he's through on the order flow, he knows the volume profile, blah, 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 blah. Or is he repeating the exact same things that you'll hear me say week after week? Yeah, it's the same thing. Next. S&D zone on the 15 second. What? MB1, MB2, he has 15 second. He has double MB. Another break forming, MB2, wow. Show me the second S&D zone I can trade from, wow. Such new concept, wow. Pilot, wow. Was happy to confirm either at this stage. Great. Happy to confirm either. Who else says that? I wonder if Ment has ever told me I can confirm both, if it's clear. Whew, let's drop down. Understand this is an MB in itself. The candle pointed at here broke the high and then nearly formed a low, therefore making itself an MB1. There's an MB1. Once the MB forms, happy to market execute a sell. The second MB happens, so he's a sell stop of the double MB. He doesn't even look for the retouch. And he's in. Where does he break even, guys? He breaks even when the price, when the protected high is under the entry price. Okay? And what happens next? And what happens? Wait for it. And what happens next? By following the simple rules taught here and the simple formula for establishing context and trade direction. What happened? Who knows? Billions of dollars. Exactly. Yep. It runs. And notice how even though Mr. mentfx, yours truly, took longs this week and they were really good longs, you didn't need the longs to make money, which is why I teach you always from the starting point. If you're brand new, focus on one simple setup to one simple direction with one simple context. And over time, as you find profitability doing that and you're now making money trading and you have more time on your hands, you are free to use that time to further establish context, refinement, add on trading plans or criteria, just like I just added triple M's to my overall criteria and plans that I'm looking for to enter, right? And basically now or adding the ability to go long or short. That's what everything that's laid here for you is for. You're not here to come in day one and go CS, double MB, MB, triple M. I'm going to take it all. I don't give a fuck. I'm taking the big zone. I'm taking the small zone. I'm taking the MB. I'm taking the first break, the second break, the third break. I don't give a fuck. I'm taking it all. You're just going to lose all your money. You have no clue what you're doing. You're going to get yourself into the striped pajama fallacy. And now you have no idea where you want to trade from, what you're trading. You have no clue what structures you're willing to trade or continuations you're willing to trade. And you have no clue what zones you're willing to trade. And as a result, what kind of questions are you now posing to the group or to someone else or to another mentorship that you might want to join? Please teach me why my structures never hold. I'm always right about direction, but my zones are always bad. Yes, they are. That's going to happen until you've finished laying a foundation through the course. And again, back to a simple topic. The foundation through the course. Why is it important to watch the course without starting to just do everything and anything? Because, and I gave this analogy yesterday. Where is it? mentfx personal. Where did I give the analogy? Let's find it. That was a pretty good one. context, something. Okay, whatever. It doesn't matter. So the analogy I made is that if you don't watch the course first and you're just trying to do it all and you're just trying to like, oh, but listen, Ment, I know you want me to watch the course, but I just want to I want to test as I watch it. You know, I want to feel the market. I want to forward test a little bit. This is the equivalent, okay? And I make this analogy all the time. This is the equivalent of you coming to me and saying, Ment, I need you to teach me to make a birthday cake because I really want to make a birthday cake. And I say, all right, here we go. What you want to do, first, you need the ingredients. You need flour, you need eggs, and before I can even continue with the ingredient list, you go, oh, fuck yeah, cake. You run off to the supermarket, you get the flours and the eggs, you run home as fast as you can, you start whisking it. You whisk it so fast, you put it in the oven, and then you take it out, and you're like, what the fuck? This is not a cake? And then you taste it, and you're like, this tastes like shit. Do you mean this? Let's see. You're like, this tastes like shit. What is going on? And I go, well, you didn't listen to the other 6 ingredients you need. You also didn't listen to how you're supposed to add them and the steps by which you're supposed to add them. Then you didn't listen to how you should actually properly cook it. Then you didn't listen to how to actually properly frost it. So of course you have that. And the person's sitting there like, oh, what the fuck? Right, yeah, I put it here. Until you have a foundation, it's really not important, right? You can backtest, but until you have a full foundation, what's the point, right? Here it is. I begin to tell you the instructions. You stop listening because you really want to make a cake. And after I said eggs and flours, you have 2 ingredients and you're trying to make a cake. And now this is the most important part. Okay, guys, here it is. And no matter how hard you try now to make that cake, it's not going to be a cake. And number 2, it's always going to taste like shit. So similarly, no matter how dedicated you are, no matter how badly you want to be a trader, if you don't go through the foundational elements of what it takes to become a trader, no matter how hard you try, 1, you're not going to be a trader, and 2, you're going to look at your system and be like, why is it shit? Why does my cake taste like shit? Well, because you didn't make a cake. For the same reason that you're not doing the things required of a trader. If you want to learn the things taught here, and I mean, hopefully, if you've already paid me, that's what you're here for, well then your main focus should be, what is he trying to teach me before I go and try to execute everything? How do I exactly bake this cake to the best level before I ever try to attempt it? Otherwise, you're skipping the necessary elements of what makes it work, right? Thank you, Andresito, for posting that for us. Yes. Ment Ramsey, I saw that one. That was funny. All right, let's go back up here. I'll work through some more stuff, shall we? Holy shit. Wait, where were we? Oh, we skipped all of these. When you say cluster, we went through that. The full course turns you into a top G. Yeah, for real. I have still time for this stuff when I'm still on 22 webinar, correct? You have infinite amounts of time. Everything here is available to you. 100%, buddy. Every new Webby is gold, honestly. I appreciate you, man. You have a tattoo on your wrist. Yeah, I do. Thank you for education. It's really great. Thank you for being here. Thank you for showing up every single day. Thank you for putting the time in. Thank you for dedicating yourself. My education does not work if people don't actually dedicate themselves. That's the truth. The truth of everything is that if you don't do the work, you're never going to make that cake. And then I'm going to look like the bad chef when in reality, you know, no one wanted to be a student. But the fact that you guys are amazing students is what makes this community and the members here what they are. So quick thank you for you guys. Pat yourselves. I owe you a Lambo for making the 100. Buddy, listen, you don't owe me anything. Go do well for yourself. If you hit the 100 million marks or so, feel free to send me a Lambo. But I'll probably have to sell it because these streets are not made for Lambos, bro. But I appreciate you. I can watch that 4 times a month. Good shit, man. This webinar is going to be in my favorite playlist. I appreciate you too. This is my first live webinar. I have a question. In which part would be the best time to start and build a backtest system when not to miss huge puzzle pieces? What would be the best after the whole course? 89 webinars plus extras or after webinar 40? The thing is, I continue to put out stuff that is relevant to your trading in some ways. I think by the time you're around 40 to 60, you'll have a very, very good staple understanding of what is required of you and how it's required of you. As you start now testing and collecting data, which you will learn about as you go through everything, I think it's still important that you continue as you can to see the webinars, because you're going to get clicks as you keep going, of course, because I focus on important psychological elements as well as important entry criteria stuff all the time. So I would still continue. And one of the most important things is I'd still show up to every single new one. I would just show up to every new one. I think it's important to be here. I think it just gets your head on right. Even if you're doing very well, I think it just orients you. Once you're done, even if you disagree with my context or outlook, you can go and do it yourself because you have a day basically allocated for it. You can always go into the week correctly, right? You have things that you have ways of going into the week that's going to hold you forward. And that's important. Sometimes you need someone to kind of just be there just to hold you accountable. Sometimes you need a group, sometimes you need chat, sometimes you need yourself, whatever it might be. Note to self, it's worth. Can I save video somehow and watch later and rejoin mentorship? I mean, listen, anyone can technically do that. I ask that you don't do that. I ask that you respect the fact that I've tried to put a lot of time and value into what I do. I don't ask for much money for the monthly for being here, and I offer a yearly as well as a lifetime. So personally, I ask that you don't do that. I can't stop you from doing that. So if you do, please just don't share them. But yes, you can do whatever works for you. I'm not someone that's going to try and rip you off all your money if you don't have the money to put in. Okay, so you do what's right for you. But to put it simply, if you find value in what you're being offered, then I think you should pay what you think is right for that value. All right, I'm just gonna put it that way, especially if I put a price on it. But this EU entry was a little bit confusing to me because it was so far from the zone. Are you talking about this one right here? So again, even though it might have looked far from the zone, it's not just the zone, okay? So iBob, the reason this was here, remember what's happening on the 1 hour here. Tell me again what's happening on the 1 hour right here when I was entering this. Who remembers? Oh, 5 second. Oh, okay. Yeah, so that was me just following through with the move. That's all it was. It was a clear move that was clearly moving bearish, and then it made a redistribution. That's it. That's all it is to it. That's really all it is to it. It was a redistribution on the 5 second. It was very clear to me. It made a very big MB up, and then it rebroke back down clearly, right? So I was happy with it. Peace from Lebanon. Thank you, man. It is worth it for sure. I'm webinar 65. I learned a shit ton. We'll finish before really testing one criteria. I appreciate that, man. And yeah, I mean, take it from Maki here, right? Like, he's at webinar 65. He's already learned a lot, but he still wants to basically finish it before focusing on one thing. And I guess this comes back to the cake analogy, right? He understands that even though he has most of the pieces, just by sticking around for a little bit more, he might learn about the trick to the frosting. He might learn about the trick to how you whisk, right? That might really change that cake from like what, a B tier to an A plus S tier, right? So that's what, and that's great. That's a phenomenal way to approach it. Quick question. When we have 6 to 7 MBs bearish and we have 1 or double MB bullish, can it still be redistribution, or because of 7 MBs we want to see some long-term bullishness? Nope. 6 or 7 just means that absorption is more likely. It doesn't have to be a full turnaround though, ever. Right? 7 just means that too much profit taking has taken place, too much entries happening, too much retail is now basically able to see the move. That's the easy way to think about it, right? Because at 7, almost anyone in the world should be able to see, oh, it made quite a bit of bearish breaks, bro. It looks pretty bearish. And that's when you see the first bullish push come in, right? That's usually why it happens. But no, that does not mean that it's ready for a full turnaround, right? At all. Like, I don't know. Like, look here, right? Maybe. I don't know. 1, 2, 3, 4, maybe 4. I don't know. I can't. 1, 2, 3, 4. I mean, these are all 4s. It's usually 3 or 4. Maybe 5, but it rarely gets to 7. But at 7, yeah, you can see an absorption. I've never really thought about it in terms of having to have a huge start of a new trend though, ever, right? What starts trends is the accumulation or distribution methodology, right? Where you kind of have this is what starts bearish trends. Not 7 MBs or anything, but the back and forth MB nature that markets usually tend to move in before big moves come in, right? Look anywhere at any point. Let's go like 4 hour. Let's go daily. Let's go to any last big high or big low, right? So like, let's look at here. Just give me a number, guys. So we'll go 1, 2, 3, 4, 5. Just give me any one of those. We'll just take a quick look at it, right? This is one way that you can start to test this for yourself. 4, okay. So we have 4 right here. Okay, so let's go back here to number 4 and really see what the prerequisites for this trend change were, right? And I can almost guarantee you it wasn't 7 MBs, right? So what happened is, again, bullish market, move bearish, MB1. Bullish, MB1, bearish, MB1, 2, 3, redistribution model, MB1, 2, 3, redistribution model, 1, 2, and now as it's breaking long, even though it's breaking long here, notice how it's already started to break long and short multiple times, which means that this is now starting a real bullish trend. And look what happens. MB1, MB2, delivery. Okay, so again, the trend didn't just start from doing this randomly and then started going long. It needed to undergo multiple redistributions, but those were proofs of breaks up and down, which by the time they were ready to start breaking properly, those followed themselves through, right? Not 7 MBs though. 7 wasn't the thing that decided it. So you take a few examples and you start looking at them and you'll notice that the example of a reversal isn't 7 MBs, right? Those can usually result in absorption or reaccumulation, redistribution. Instead, it's this notion of we've undergone a few redistributions or we've undergone a few back and forths, and now the new MB or double MB is going to play a significant part in pushing that price into a given direction, right? And notice what's interesting here too. Like, look at this. What do we see, guys? Watch. 1, 2, 3, 4, 5, 6 MBs. Now it broke bearish, okay? It's made the break. It's made actually MB1. It just made an MB2. The likelihood here, guys, is what? Is it bearish or is it bullish? Just from this time frame. Yep, exactly. It's bullish because this is what? What do we call it? Yeah, reaccumulation model. So you would wait for a 4-hour or an 8-hour to probably shift bullish, or you could start lower time frame triple M's. Let's see what happens. I don't even know, but so you can see it comes down, makes a bullish break, re-breaks bearish, remains itself bearish. So at this point, you might be sitting around just waiting for either bullish break or redistributions. At this point, you might not know because this could be easy accumulation based on this left, right? You can wait. You get a break up. At that point, you might be long from here or lower time frame longs, because right now, overall reaccumulation likely makes more sense. Double MB comes into that deeper MB. That's your trade, right? MB1, MB2, there's your trade. And you're looking to take that higher. Delivers to that. And now, as it's making bullish MBs, if it breaks down, is that reaccumulation or redistribution? Or distribution, sorry. Yeah, it's likely reaccumulation, right? So let's see, we get a breakdown. We would start probably on a lower time frame watching for longs again. This is kind of the state we're in right now on EU, right now, right? And we're waiting for the longs to come in, right? Makes that double MB down, makes the MB up. At that point, I'm very bullish on this market now. I want to see like this just kind of deliver to something before going down. Now, we can be wrong, but we follow these things over and over again, and they start doing the same thing time and time again. And then we can follow that through on lower time frames, and we get our bigger bullish move. Re-breaks down and plays around for a while, breaks up. So now we're having so here's what's important. Now we're having multiple MBs long that are going back and forth. So now if we start seeing bearish MBs, is that signifying a more bearish or bullish trend? Yeah, bearish, exactly, right? So we get a break here. Now it's signifying a more bearish trend. We'd probably start looking for bearish. We'd start looking for reasons to short to lows, right? Over and over. We get shorts to lows. We start looking for reasons to short to lows. We get double MB. We look for reasons to short to lows. We look for absorptions to short to lows. All right. And this is how markets deliver time and time again. Now we've made 1, 2, 3 MBs. Okay. We can still look for lows if we get a break up. What is that? Redistribution or accumulation? Yep, redistribution, right? And the game repeats. We get the bearish moves, easy shorts, easy shorts. Now we're at 1, 2, 3, 4, 5 MBs short. Let's wait for a potential absorption, and that should remain. There's an absorption. Is this likely to go up now or down? Yep, down, redistribution model. We'd be looking to target the lows. And again, we would use our lower timeframes now to establish that context. And it's the same thing on repeat. Every single fucking year. This is what? 2014. Right? This is the same thing on nonstop. And yeah, we're going to be wrong sometimes. We're going to be right sometimes. We're going to get zones that don't hold sometimes. But that's when we start stepping down and we start using context to attribute everything. And now, what do you know is happening, guys, from this high to this low on a 4 hour or a 1 hour? What's repeating? MB's overextended? No, well, on the way down, sorry. What do we know is happening, like, as these 4 hours in here, from in this range here? What do you think is happening on the 4 hour and 1 hour as we start looking? Yeah, more redistribution models and more bearish distribution models. So, for instance, if on a 4 hour, we started seeing price here going back and forth and long and short, and then it makes a short break, is that a bearish sign or bullish sign? Based on the context of now being a bearish on the higher time frame, right? Of course, it's on the bearish side. So then if we step down and look at that on the 4 hour, right, what are you going to see? Well, take a look. We underwent the same thing. We went super bearish, we started going long, back and forth. We broke bearish, and then we sustained the bearish push, right? It's all fucking, it's the same thing on repeat. It's kind of insane how on repeat it is. It's still confusing sometimes to know when we're done with the accumulation because we can still be in a redistribution, right? Yes, you will learn this over time. Again, it's going to come with multiple time frames, but again, like we just did today, like we just spoke, you were right you were right every single time that I asked you, right? Because I'm laying out the foundation for you, right? I'm saying we started to move, we started going, we made the we did this, likelihood is down because it's clearly redistributing. Great. Then it did it again, potential redistribution. Okay. Then it did it again, likely accumulation. And then you got whatever, accumulation happened, rebroke back down. We said likely accumulation, then it played back, broke long and broke short. And at that point, I asked you again, you said bearish. And that's true because again, we're undergoing we're undergoing what price likes to do before it's ready to reverse, to put it simply, right? And EU's doing the same thing right now, right? What the fuck is this? Get it off my screen. What just happened? Okay, all right, that's fine, it's fine. I'm not angry. So like, and right now we have EU doing the same thing, right? Think about it. We have the market that was going redistributing back and forth, bullish and bearish, finally broke up. And I said, okay, we can see the bullishness come in now because we're no longer looking at redistribution. It started going very long. We started saying, okay, it's probably going to get the move down so we can start seeing an accumulation happen. And as it breaks down, we can see this as reaccumulation now or longer term reaccumulation. Again, context trumps all. But notice how we went left. We found random times and we just kind of followed and we started reading the MBs. And again, it's easier when I'm sitting there and telling you, you know, what are we looking here? What does this mean? What does this mean? But you're going to sit there for yourself and do the same thing, right? You're going to sit there and say, what is this telling me? What does this tell me? What was the prerequisite for that to happen, right? You understand what I'm saying? iBob? Because again, like think about the exercise we just did. How did you predict every single one correctly? Right? Was it a random guess or was it the fact that based on the way that I framed the question, you were like, oh, of course, this makes sense now, right? And we didn't know. We were just playing that replay mode, right? I mean, I might have known, but I didn't actually know. I was just kind of replay moding it and just basing it on what I know. And you were able to do it because, again, you're in the setting with someone that's done it over and over and over again for a while. Now, you need to get yourself to that level by asking yourself time and time again, what were the prerequisites for this move happening, right? You're like, even right now, what were the prerequisites for this low right here on this 4 hour getting ran? Well, very bullish market that actually had a reaccumulation before it, broke long, rebroke short, broke short, double MB broke long, rebroke short, and that's what made the delivery of this happen. Okay. Snapshot, remember it, pattern recognition. In the future, as this happens, you're going to be like, this looks exactly like the redistribution model that I normally look for, and it's at the start of the move, so I'm going to expect this likely to be a redistribution, and I'm going to look for it to continue short. And now if this breaks long, I'm likely still going to continue to watch it short. Crazy how you read the market time and time again. Who doubts your craft must be blind. Bro, no one doubts. No one doubts out here. No one that's been through the course doubts. Let's put it that way. Others might, but that's okay. We'll take it. Because I don't mind. Like, at the end of the day, I'm not selling signals. So my ability to predict doesn't matter. Ever. Right? So I never understood it. It's like, what's the doubt for? It doesn't matter. Because I'm not here telling you what to buy and sell. Ever. So we went through that. Yeah, it tastes like shit. Exactly. Thank you for posting that, by the way. That coffee got him hype. Always, dude. Chucked a few ingredients together and hope for the best. Yeah, that's a lot of the Instagrammers that many people follow. Guys, that's right there. What's happening? They go, damn, I learned so much. All right, here I go, guys. Give me a market. Give me a market. I don't even want to do this again, dude. I don't even want to do it. But yeah, we're not gonna do it. No, okay, we're not gonna do it. It's just not. It's not even time for that. But yeah, it's the same thing that you see a lot of Instagrammers do. They learn one concept, they go and find any version of it that works anywhere, and then they put the fluff on there and they go, boom, come study with me. And it's useless. It doesn't get you anywhere. It doesn't teach you anything. You're just learning worthless names for worthless concepts. This goes back to the thing I spoke about a few weeks ago where I showed you guys all the names of like pennants and dibbled up flags and shark fin soups and the scallop, right? You guys remember the ascending scallop? We don't need any of that. It's worthless. We look at price and we understand how price moves in relation to... Okay, well, actually, the ascending scallop worked. It's working, guys. The ascending scallop's actually working, so... Yikes. Who remembers the ascending scallop, guys? I can't believe it. I cannot believe it. All right, let's go back up. Let's get through some more of these questions. Ment Ramsey. What are your thoughts on UJ? All right, so let's do a little bit of that. A delivered. Who remembers us talking about the overextended MBs on this last week? And that we were going to see the longs right here that I drew taken out. Does anyone remember this? I didn't remember anything a little bit like that. I think we did it last week, right? Yep. So exactly, right? So we can go and frame it around that, right? Weekly, what's the weekly doing? Very bullish in a huge bullish range, just broke down once. Could be a reaccumulation, we don't know. Really not much to do on here. This could continue short or go long. Really nothing to do on the weekly, right? So in this case, if the weekly was the only thing you traded, I wouldn't even touch it. There's nothing to do. But we can now go further and say, you know, the daily was really overextended. And at that time, the reaccumulation was very likely. So we're going to look for longs, and the longs are starting to deliver. Now let's ask ourselves, how are those longs delivering? So right now it's very bearish, and it just made, did it just make a break? Let's see. So it hasn't even made the first breakup. So it's made 1, 2, 3, 4 MBs down, and it hasn't even broken up one. So I actually would want to see this is the higher term target this week to get taken out. Now we can confirm if that's something that's worth following on a lower time frame, right? We have MB1 created right here, right? There it is, MB1, MB2, MB3, and it's not clustering, so that's important. Okay, so it's not clustering and it's making 3 MBs. Okay, cool. So we could see an absorption into continuation. That's what I'd want to see if I wanted to follow this. So one thing you could do is just absorption, watch for something here, and then lower time frame, watch for the break, and then start following that during a session. Or I wouldn't really touch it on any other. I wouldn't touch it on this time frame. I wouldn't even like to use this here personally. Maybe we go on 1 hour. So 1 hour had accumulation model, broke up, reaccumulation model, broke up. So right now, right, it has MB1, MB2, double MB, but notice this, extremely, like, not that clean, not a clean area, but this is a double MB. So that lines up perfectly with the absorption expectation of a higher time frame, and that double MB is coming from basically this MB right there. Okay, now look at where that lines up with on a 4 hour. That lines up with this absorption now, okay? Go back to the hour. Take a look if we want to refine further. We have this area here and this area here. Both are unmitigated. Now, based on the type of person you are, you can go after the deepest point or not the deepest point. This kind of looks like the best one right now. We're going to look at a 2 hour now. Take a look at what's going on here. The 2 hour is in a very bullish, right? MB1, MB2, MB3, MB4. So 4 MBs, also likely for absorption. Yeah, so I'd want to see, you know, start of the week, I don't want to see this absorb the lows here, right? So if during a session, again, we're bullish on this, but at this moment, if during a session you get a very clear redistribution model, like on the 5 minute, look at this. 5 minutes started being bearish, broke long, broke bearish. That's a very bearish sign. Broke long again. If it breaks bearish, why can't we follow this short into these areas here? That's how we can create context. So start of the week, I'd want to see absorption, and I'd follow this model down if we got a clear move. Maybe 15 minutes. Let's see what we got. So 15-minute made an MB1, MB2. So you could already start to confirm probably like here-ish, right? So this is a fine start to the week confirmation, right? If it comes in like on a Tuesday or something, because Monday's bank holiday, right? We can work with this. And that could be something that you're looking for the week. Can you please show an example of MB cluster? Any market, any time frame. Yeah. Here you have MB1. Pulls back into the last possible supply zone with nothing left. Mitigates it. Breaks. Even though it's an MB2, this is also classified as an MB cluster. This is also classified as MB cluster if it happens after, on like the third MB. So if you have 1, 2, then it comes up to the last possible mitigation and breaks again, 3, that's considered an MB cluster, and I'll still be open to taking trades off here. Like that. That's an MB cluster. Okay? But yeah, for UJ, yeah, I think this makes the most sense. So overall, you're working with the bullish side. You probably want to see this high get taken out this week. Daily chart, right? It's a good high target. And then intra-week, you're basically just looking for reasons to either target that if you get really clear buildups of longs. Otherwise, this is a good area to look for a potential short into here, which we can, yeah, we'll leave it like that. That's fine. Let's look at a 1 hour again. Yeah, so the 1 hour, like this is the good low target off the hourly. This could be start of week. But again, like if you're, this is a pretty much outlook, and Mudez is kind of the outlook section, right? But if you're someone that's just kind of starting out and looking for one side, generally long, what I would do is I just set an alert here and wait if we get that. Otherwise, I'd just walk away, right? Because I don't see anything super clear on this right now. I just see basically what you see here. Because you might get the push really early in the week. But I think you're going to get that move down, absorption, and then you're going to get that push. So I'd play for that. Okay. Gold, please. Oh my god, I hate looking at gold. It's just not, it's just, you don't follow it the same way. It's, but alright. Yeah, gold is a stock. You treat it like a stock. Yeah, very bullish, bearish, just like EU, same thing. You're not exactly sure 100% which way it wants to head right now. It's likely in a reaccumulation. 4 hour made what? 1, 2, 3, 4, 5. Yeah, like start of the week, watch the target this. Like you should already be positioned on this for longs because it's very clear for longs. Oh, you didn't really get anything clean. Oh, you did off the 15-minute. Yeah, 15-minute gave a perfect, very bearish market into bullish, perfect setup, continuation. And then you're looking to clear this long now, right here. Because that would be the absorption point of the multi MBs down. Let's see what we got here. Yeah, it's right now there's no clear on the higher. You'd have to wait because this can either break down to reaccumulate or this can reaccumulate now. This is not really decided, so lower time frames is the only way to go. 4 hours clearly overextended. Could see a move back up into there. I would not sell like in this S&D ever. So that's something important about understanding context, right? You have MB 1, 2, 3. By the way, the guy that asked cluster, this is a cluster. This MB break here is a cluster, right? Why? Because it mitigated the last possible zone here. Broke, cluster, broke again off a cluster, and broke again. And broke again. So, I mean, the cluster's already over. Nothing to follow there. But you can see this trade here was off the cluster, which was perfect, right? MB, cluster, boom, gives you a great entry here off the cluster, off the mitigation, and then moves down. So you position on that. And now, yeah, just looking for the break up. I'd look for a break up and then follow that up for maybe like a double MB start of the week. Other than that, I wouldn't really watch it for anything else. That's what I see on this. EU, main thing that I trade, pretty much the same thing, right? On higher time frame, we're less sure about what it wants to do. Let's actually clear everything. I've had this on for a while. There we go. Let's clear the triple M's for a second. Let's make this super clean, okay? We're gonna make this black. Maybe we'll make it like dotted or something. There we go. Dash, sure. So again, mark your, just do it so you remember. MB1, right? Keep going, keep following it. MB2, MB3, MB4, MB5, breaking down. Likely a reaccumulation. Again, do we know if it's going to go down or up now? No, we don't. Not necessarily. But we're very close to this low, and we're failing to displace it below it. I really think we're going to see that displacement. So start of the week, right? Main target is going to remain to this low, right? Let's dot this out if I can to make it easy. Cool. Right. So that's the low of the daily, right? For the MB that we want to see basically traded through. So that's a good liquidity point for the start of the week. Now, again, does that mean it's going to happen now? No, not at all. We might get a redistribution model up here and a 15-minute setup that can take us short into there. That would be the best opportunity. I would love that kind of opportunity to happen on this. I'm going to make this. It's hard to see. Okay. There we go. So yeah, just looking for that to continue its move. But the 4-hour here, actually, right, it had its MB redistribution model. What am I doing here? And then it broke down just now for an MB1, MB2. So there's actually a double MB on the 4-hour, and that's all coming from, as you saw me, I had it drawn out. You have it from here. This was my minimum target before. But you also have this unmitigated portion here. So let's go and take a look at if we can refine this further to see where it's coming from. So 1 hour is making a redistribution, which is coming up to this very cleanly, very nicely. Take a look at a lower time frame, see if we can find anything worthwhile. So like it's really coming from this last up move right here, right? This is all it's coming from. Yep. So this week, I'm actually fine with taking a sell off this potentially. So that can start off a pretty nice bias. I'll set an alert there for myself in case I'm on during the time. That makes this a very nice 4-hour low. All right, so just kind of have your targets on here. Draw this for yourself if you want to. It might keep you in action. And the reason you want to use the raise is because when you're on a lower time frame, right, it'll still say it on the very right. So you know what you're looking at. So you know that if price is here, right, you know it's absorbing a low of the daily, right? So longs might be very nice if you get a clean move. Just like right now, I mean, you already know what this zone is, but if it starts coming down, you know that you have a target here and a target here. For a higher time frame, so you have a lot of area to work with as well. So, you know, getting positioned is very clean. And notice what we have here on the 5-minute. Honestly, look at this. We have MB1, 2, 3, 4, 5. We have 5 MBs up. We might see an absorption 6 off, right? And that would meet a distribution model. So notice how everything comes together. It's all the same thing on repeat, but as you begin to understand how these concepts interact with each other for turning points, for continuations, you become a lot more proficient in reading price or whatever you want to call it, right? So yeah, start of the week, I like that 4-hour zone. It's very clear, it's very clean, nothing wrong with it. Yeah, why not? Why not? And the target of the daily. Otherwise, we'd follow the redistributions down. Yeah, I mean it's super clean. It works hand in hand with what's going on here. And even if this 1 hour is a bullish shift, right? Guys, would I want to buy here or would I want to use this zone as a phenomenal target? Or even like this MB? Do I want to buy here or use it as a target? Yeah, a great target. So notice how you can stack these confluences of targets instead of using them to go long, right? You could go here and say 1 hour. Here, wait, we can write like, you can literally write what it is. Bullish MB 1H. Don't trade from here, target liquidity, right? So now you have basically like, if you're in shorts and stuff and you're looking for reasons to get out potentially, an area to get out would be here or a little bit deeper in the refinement areas, right? This is something that you could do because these areas are creating the first breaks and they're not strong for holding price up. This is where the natural dummies basically think springs are occurring, right? Now, if you are one of those people, it's not necessarily fully wrong, but this is where that happens. A lot of people see this initial break, oh, bullish. And yes, it can work, but what's the likelihood here, guys? What's happening with this market? Is it generally in redistribution models and going short, or is it going long? Yeah, it's in redistribution models currently. So even though the daily, what is it, guys? Is it 90% short, 80% short, or is it 50-50? So even though the daily here is a 50-50, the fact that we can work with where we're inside of and what the bias is, we can find ourselves in a certain bias here, right? In a certain area. And now we know where we want to see price go in the case that it comes. And again, when everyone's watching the long here, and they will be looking to long here, they're looking to long this support as a head and shoulders, as normal support. They're looking to long this potential this week, channel breakout, which might happen with an absorption of our zone or something, but we don't care about that. I'm just showing you guys. They might look to long here as a deep point, this as a demand, this as a bigger demand on a bigger time frame, this is a chalky flippy, etc. And this is where orders are going to be what? Where are orders resting now? Right below. And that's how we end up being on the correct side a lot of the time. And when we get positioned, we basically become the composite operator. We get huge moves and we get them quickly. So don't even honestly draw that. It's not needed, right? Keep your charts relatively clean if you can. We don't need this here. It's not important. Do you care about the daily demand on the left? No, not at all. This daily demand's very far. It's up here. And in the case that price is making its move here, yeah, we might see mitigation, but what is this going to act as like again, guys? Oh, demand, sorry. Daily demand. What, like this one? Off of the like 5 MBs to the top side? How do you think I feel about that? Yep, liquidity. Right? The better option, like I said before to the guy that posted his 2-day, right, where he's looking for the thing here, the better option is to follow the shorts until they show you they want to go long. And yeah, it might be an absorption of here, or it might even happen down here, right? You don't know. That's why I wouldn't look left here to try and trade this. Instead, I would wait for a showcase that it wants to go long and move long, right? A much better way to follow that. But yeah, this is another great area where the chalker flippers are going to get likely stopped out, right? A lot of people are looking at this as a potential supply, and even though it might be okay, I mean, I'd probably refine it much further and look for like a small mitigation play here. The likelihood is the mitigations off of this are going to act as huge propellers forward, right? So imagine, think UJ last year. This is UJ last year. It's the same thing, right? UJ last year. Right, same thing. Any bearish break that occurred that had a clean zone ended up being a propeller to take ourselves forward. Any bearish break that occurred with a very clean zone acted as a mitigation propeller to take us forward until it clearly fucked off to the downside where we were bearish on it basically around here. And then we started following this short, right? And this thing is still relatively short. I still want to see it retain its short moves, but we're probably going to see some kind of absorption before the continuation short. Then we're going to see it continue. Just like we're looking for EU to continue. Everything's the same thing. Nothing is different. And it's the same thing on repeat. Right? Quick outlook on Bitcoin. Same thing as last time. Yep, still bullish. Nothing really to do on this. I would trade it the special way that I teach. I actually added this recently. I changed it from star method to bet on 2 method. I posted the video here so you can think about it. Very easy way to follow, like terminology wise, so you know exactly what you're looking for, right? And I would think about it that way. So like right now, I don't see the bet on 2 methodology being met. This is a breakout here. It's okay. And it might sustain a push up to like 30K, 27K or something, but it's not a clean move for me. The only clean move on it was in here, and then on the daily, there was a nice move on it right. There was an okay move here that stopped out or broke even, but it was kind of wicky. And there was a good move here on an 8-hour. But other than that, right now, there's nothing. I don't see anything. Like even on the 4-hour, yeah, there's just nothing here. But overall bullish. I mean, even read the MBs, right? Bullish, 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 bullish. Reaccumulation, bullish. Right? If you look to get position here, what do you think is happening here on a lower time frame from webinar 88, guys? What do you think is happening in this leg on a lower time frame? Oh, let me delete this stuff. Yeah. 4+ MBs plus a triple M, probably, right? Let's see. We said on the 4-hour, we said it would happen in here. Let's go 1 hour. Right, look what happened here. Back and forth, showing what? When it goes back and forth like this, what is that showing us likely is happening? Continuation down or accumulation? Yep, accumulation. So it's giving us clarity as to where it might want to head. Starts breaking down bearish, and look what it does. MB1, MB2, MB3, MB4, breaks up, breaks down, breaks up, fucks off to the top side. Accumulation. The same thing over and over and over again, non-stop. It loves it. So yeah, you'd either look for the same thing or just continuations long right now, right? You just have liquidity up here and you just want to see it long, right? We bake cake, not cook. Brain not working. How many FTMO challenges out of 10 do you think you would pass? Wondering, since you're on the low timeframes and 10 RR in a month seems pretty reasonable for you based on your performance. Out of 10 challenges, so 10 challenges straight up, how many of them would I pass? I have to think about the math of it normally, but probably I don't know. I'd probably say like 5 or 7. Around 5 to 7. This guy said 8. No, I'd say 5 to 7. I can't guarantee trades. Trades don't always happen. I can take break-evens and losses or a few in a day. I'm not guaranteed to always hit, my plus 5s because, once I hit a plus 10, I can't really take off the 10% there because I might be in drawdown. Some of them might just happen because a lot of my first partials are 10 RR, so easy passes there. So just over 50% of them would be probably passes. 6 or 7, I would say. I don't know. Probably 6 or 7. From back in the day, I think that's usually what it averaged out to, 6 or 7. And then verification was a lot easier. Like of those 6 or 7, I'd probably pass 4 or 5 of the verifications. And that's just because I'm on higher risk and I can go into more break-evens and drawdowns that end up being too many losses. And yeah. And then you get funded and you go crazy and then FTMO pays you. But we're not going to talk about that. All right. We have Lay with a little photo for us. Euro USD. Looks like I posted this. What about this? Hi, man. I was studying your trade ideas in Discord and had a question for this markup. Is the line for target where you will move to BE? Yeah, this is move to break even. It was move to break even. This, yeah. Yep. I think this was like it looks like an FMB entry. Are you sure I fully took this, or was this a full-on test? This might have been a test. Because sometimes like I'll post something and be like, this is fully for testing purposes. So I'm not 100% sure if I took that. Oh, why did I decide the MB there? I think it was a number. I think it was number based. I think someone in the mentorship at this time was testing a break even at 2.5 RR every time. I think that was 2.5 RR. Just so you know, Lay. Because the guy that was testing the FMBs for himself found profitability if he just moved break even at like 2.5 or 2 RR or something, and then just let it go. Got it? All right, good stuff. Good stuff. All right, guys. I think we're gonna wrap this up in a second here. I've been messing with my systems with the data model, like the partials, and I noticed that it performs a lot better when I remove the break-even rules. Yeah, that can happen, especially on a higher time frame. That very much might be the case. I've also noticed similar things. And that's no problem. Like, of course, I plan on going back to my trades and trying to point out different BE rules. You don't even need that. Remember, BE rules are to add to your bottom line. If they take away from your bottom line, who needs BE? You don't need it, right? Part of management is just knowing whether you're moving to break even or leaving it open. That's also management. Don't forget that. What if you turn off candles and only use structure indicator? That's not how it works, bro. Go through the course, my good man. Pest, I told you earlier, bro. Go through the course. You got it. All right, I think we're done here, guys. I think it looks like we're doing pretty well. Wait, what's up, man? I have a question. Well, ask it, bro. Come on. Thanks, Anton. Thank you, Oscar. Thanks for being here, man. What's going on, Anthony? Can you show the structural tool with MB? Yeah, bro, I already did that. It's right here. It's on here. 2 hour 15. I think we're done. Yes, I do. I do think so as well. But I'm waiting for Anthony's last question. Opinion on the 1 hour refinement posted in the equity curve. Equity curve results. Is it this one? I mean, it still looks clean. Sure. Yeah, it looks very clean. But the rules... MB any direction. Using 1 hour. Pick POI based on imbalance. I'm going to get zones. Sure. I mean, like, again, if it follows, in general, what I teach here, then it's fine. I can't really do much around that. But yeah, it's starting to look better. I can see more context in it, which is huge. Right? Like, again, it might sound scary when you hear, oh, you need to use context. I know that word sounds scary because you're like, oh my god, so much stuff. Oh, fuck. But as you start going through it, this is literally context occurring, right? Hey, I started to realize that I should take POIs with this being the case. I should also stay away from big wicks. I should also stay away from this. You're starting to refine things. You're starting to add context. I know it sounds crazy, but these tiny questions that you ask yourself and then add are going to change the bottom line in huge ways. And in the future, when you start looking at setups, you're like, oh, this is not a setup at all. And then you'll be like, oh, but this is. And someone new here will look at that and go, what the fuck, bobtailed Ruby? This is insane, bro. This is too much it's too subjective, man. You're like, no. This is not subjectivity. This is my unique approach, right? That's how it works. So yeah, this is starting to look a lot better. Keep going, man. Have to watch it again with subtitles. Nice. Hurry, Anthony. Let's say price mitigates my S&D, but the last MB is an absorption, but the price breaks higher. Do you take the trade on the double MB? What? Okay, I'm gonna try to draw this because that just broke my brain. Let's say price mitigates an S&D. Okay, so you have an S&D. Price is mitigating it. The last MB, so that would be this one, is an absorption. So that MB absorbed a previous protected high, but the price breaks higher. There's nothing to do here. I need a drawing. I'm going to give you 2 minutes to give me a drawing. I'm going to give you 1 minute to give me a drawing, actually. You have 50 seconds left. I'm on the phone. Well, you got 40 seconds. If you want it badly enough, you'll get me a photo. Let's say price broke structure. Okay, it broke structure. And I'm waiting for my demand to get mitigated. Okay, so the other way. So it broke structure, and you're waiting for demand to get mitigated. Sure. Okay, we're waiting. You're waiting for the demand to get mitigated, but the last MB is an absorption. This MB is an absorption? Who cares? That would just make this the MB. Alright, you're gonna have to DM me, dude. This makes no question. I mean, this makes no sense. You got me fucked up. I'm super confused right now. Just send me a private DM or something and I'll take a look. Give me a photo when you get a chance, and then I'll shoot you an answer. Alright guys, listen, thank you so much for being here. We're 2 hours 20 minutes in. I wish you all a very good trading week. Please enjoy it. Please have a good time. Please watch out for any red news. As you can see, there's quite a bit. There's a lot of red news this week, so actually watch out big time. Monday. What is it, guys? What's Monday? It's a bank holiday. Don't go crazy. If there's a very good setup, by all means. But if you're the kind of person that's going to sit there confused about why market's weird and slow and not delivering the way you want it to, and it's a bank holiday, guys. Enjoy your day off. If you have work or whatever, please enjoy your time at work, and enjoy your days, guys. All right, great. Have a good week. Love you all, and I'll get this out soon.